Good morning and a very hearty and warm welcome to our respected dignitaries who will be present on the dais in a while, all the speakers present here, our participants and everyone present here on behalf of Sa-Dhan to the Northeast Conclave on Financial Inclusion. As you all know, Sa-Dhan is a RBI appointed self-regulatory organization for microfinance institutions and is the first and largest association of community development finance institutions in India. And this is the 25th year of Sa-Dhan, and it aims in creating a better understanding of the microfinance sector among policymakers, funders, banks, governments, researchers, and practitioners. It is also recognized as a national support organization by National Rural Livelihood Mission, and today's event aims in revitalizing the microfinance sector in Northeast region to accelerate inclusive development. So now I would request the CEO and ED of Sa-Dhan, Mr. Gigi Mamen, to introduce and welcome our respected dignitaries present here today.
Good morning, namaskar, a warm welcome to all of you. Let me first of all invite our dignitaries onto the dais. I would like to request Mr. Manindra Sharma ji, Secretary Panchayat Raj and Rural Development, to kindly come and take this position on the dais. I would also like to request Mr. Naveen Digra, CGM NABARD, Assam Regional Office, to please take the dais. I would request Madam Sunita ji from Reserve Bank of India to please come and occupy the dais. Request Carol Furtado, CBO from Ujjivan Bank, to please take the dais. Mr. Sharad Das, the CEO of Grameen Finance Private Limited, as well as the board member of Sa-Dhan, please come on the dais. I would request Anjan Das Gupta ji to please come and occupy the dais. Sri Manoj Gangal ji, please do come and take the dais. I would also request Mr. Mandu Singh ji also to please come and take this dais. Where is Mr. Mandu Singh ji? Mandu Nath Sharma ji? Sorry, Mandu Nath Sharma ji, sorry, I always. Okay. So thank you so much, honorable delegates, honorable distinguished eminent personalities occupying the dais, and also all the delegates who are present in this room for being here for this Northeast Conclave on financial inclusion. It's my privilege to welcome each one of you for this important conclave. We had planned this in the month of May, about 4-5 months back, but unfortunately because of certain developments which happened during that period, we could not have it that time, and I'm happy that we are having it today, and we are having all of you here for this today's conclave. We all know Northeast region is an important region as far as the country is concerned. It's a very strategically important place, and it has its own importance as far as the country is concerned. Although the land area is only 8% and population is only around 4%, but still it occupies an important place as far as the country's geography is concerned, country's strategical planning is concerned. And this is an area which needs a lot of support, lot of important, lot of I would say lot of importance as far as any planner is concerned. We all know that Northeast has its own problems. One of the problems which faces the Northeast is the developmental, probably it's still not reached to the level of development which the other part of the country has reached. It is mainly because of, there are several reasons for that. One of the reasons would be that there is a lack of capital. And raising capital is one of the major challenges the region is facing. I have a personal experience of being in the northeastern region because I had worked in, when I was in Nabad, I had worked in Manipur for almost 3.5 years, and I have seen the northeastern region very closely. And I have seen also how people used to run around for getting a small loan also. So getting loan, getting capital, raising capital has been always a major problem as far as the people of Northeast is concerned. And probably that is one of the reasons why the region has also not been able to develop the way it has, the other areas have been developed. Even the banking penetration, if you see, it's quite low, lower than many other places. The density of bank network is very low. So, in this being the situation, I thought microfinance is the most important activity as far as this region is concerned. It's a best solution to the capital needs of the people. Because if you see the people in Northeast, that community feeling, community affinity, as well as the self and mutual support is quite strong here. I have seen that. So in a microfinance sector, we know that it is basically the self-help and the mutual help is the most important aspect is microfinance. Whether it is a self-help group program or whether it is a joint liability group program, the self-help and the mutual help is the most important aspect to it. And that is the reason why probably the microfinance would be the most important thing which can happen for the northeastern region. And it so happened also. We have seen how microfinance has grown in this region during the, I would say, during 15, 16, 16, 17 and on, we have seen how the sector has grown here. There was an occasion when the microfinance in this region, especially the state of Assam, had the highest growth rate among all the states in the country. But then we have also seen over the last 4 5 years or 3 4 years how microfinance has also come to a standstill, or it's not happening at all in this region. So when the other region has been growing as far as the microfinance portfolio is concerned, we have seen it has in the last 2 3 years it has doubled in certain geographies and it has gone even tripled in certain geographies. But whereas our situation is little pathetic, because in 1819, when we had a total portfolio of around 12,000 plus crore as far as Assam is concerned, today it's only around 6,000 crores. So it has degrowth. There has been a degrowth. The portfolio has come down by 50%. And also we know that the portfolio also has the kind of portfolio which we are talking about, that 6,000 crore, has a huge NPA also. But then one positive aspect is that we have been seeing some green shoots, especially after the COVID is over, when the new loans which have been given, whatever little which has been given, has been performing well. We have been also seeing good performance as far as the recovery is concerned, as far as the new loans are concerned. That means there is people have a intention of repaying back if the climate is appropriate, if the environment is appropriate. So I would all request everyone present here that we need to create the right kind of environment so that people can get support from the microfinance sector. And microfinance sector, as we all know, it is one sector which supports the poorest of the poor people. Without any collaterals, money is being dispensed at their doorstep. Which other institution can provide them? And that is something which I was talking about, the need of the capital. And that can be met only through the microfinance sector. But then creating the right kind of environment is most important as far as the sector is concerned. So let's hope that right kind of environment will be there in this region so that the sector can grow. Not only the sector can grow, the people can benefit from that. It's not that the growth of the sector. I am more interested about how the people can get money and how their development can take place. So for which let's work together. And today's conference, today's conclave of this Northeast region is exclusively for this aspect only. We're looking into this aspect only, how to re-energize the microfinance sector in this part of the country, how to revitalize the microfinance sector in this region. So our discussions probably today would be to understand and to make a roadmap to see that how we can work together, whether it is government, whether it is MFI sector, whether it is all other stakeholders, including the funders like NABARD, SIDBI, and also the policymaker like RBI. So everyone present here has a role in that. Let's all put our minds together and see that how best we can revitalize the microfinance sector in this part of the country, so that the sector can grow, the people can get benefited because of that, and they can have their better lives as far as the people are concerned. So this is what we are looking forward for. Of course, Northeast has its own challenges. We may not be able to, because we have seen that the hilly regions of the part of the hilly regions have its own challenges. Probably we also may have to look at a new approach as far as the microfinance is concerned. We may not be able to do the same kind of microfinance activity like we do it in a plain area. Having the group mechanism, having the financing through the groups, and all may not be that easy. So we also may have to look for a new approach as far as the sector is concerned for this region. So let's also discuss today what is the new approach we can take as far as this region is concerned. So let's put our minds together, let's work together and see that the sector grows once again and it reaches its past glory, and it does much better than what it has been doing earlier, and will help the people of the region. So with this, I welcome each one of you. Especially I thank Mr. Manendra Sharma ji, who has been very kind enough to be here with us today for inaugurating this session. And I am also thankful to Mr. Naveen Nigra, who is CGM NABARD, who is also a major supporter as far as the funding of this program is concerned. He is there with us. RBI Madam Sunita is here. We also have people from the sector. We have people from the industry. So I welcome each one of you, and all the delegates who are present here. I welcome each one of you for this one-day conclave, and I request the dignitaries to please join us for the lighting of the lamp to start the inauguration of this session. Thank you.
So now we'd like to felicitate our respected dignitaries present here, and for that I request CEO and ED of Sa-Dhan, Mr. G.G. Mamen. We'd like to felicitate Mr. Munindra Sharma, Secretary RD, with her Fulam Gamusa, with our very own Fulam Gamusa. Mr. Munindra Sharma is the ACS Secretary, Panchayat and Rural Development Department, Government of Assam, who has taken the additional charge as Director, State Institute of Panchayat and Rural Development. So now we'd like to felicitate Mr. Naveen Dhingra, CGM NABARD. Mr. Naveen Dhingra, CGM NABARD, an economist by profession. Mr. Dhingra has put 34 years of service in various regional offices of NABARD in different capacities. He has worked in Maharashtra, Rajasthan, Punjab and Haryana, Jammu and Kashmir, Uttar Pradesh and in New Delhi office. He has also worked as District Development Manager of Meerut in Uttar Pradesh, Dhingra, and has the credit of discharging responsibilities as the Managing Director, NABARD Consultancy Services, New Delhi. He has the distinction of having experience in supervisory and developmental fields. So next we'd like to felicitate Ms. Sunita, AGM of RBI. Please put your hands together. We'd like to felicitate her with our very own Fulam Gamusa. We'd like to welcome and felicitate Mr. Carol Furtado, CBO, Ujjivan Bank. Please put your hands together once again for Ms. Carol Furtado. We'd like to felicitate Shri Sharad Das, CEO, Grameen Finance Private Limited. We'd also like to felicitate Shri Anjan Das Gupta, CEO, ASE. We'd now like to felicitate Shri Manoj Nambiar, CEO of Arohan. And now we'd like to felicitate Shri Mantunath Sharma, CEO of Nightingale Finvest Private Limited. And now, for the inaugural address, I request Mr. Munindra Sharma, Secretary RD.
It's been a great pleasure to be here this morning in this notice conclave on financial inclusion. And in the dais, we have Mr. G.G. Memon, the CEO and ED of Sa-Dhan, Mr. Naveen Dhingra, CGM of NABARD, Ms. Carol Furtado, CBO of Ujjivan Small Finance Bank, Ms. Sunita Singh, Manager RBI, and different CEOs of various financial institutions like Mr. Sharad Das, who is CEO of Grameen Finance Private Company, Mr. Anjan Das Gupta, CEO of ASA, Mr. Manoj Nambiar, CEO of Arohan, and Mr. Mantunath Sharma, CEO of Nightingale, and distinguished bankers, industrialists who have gathered here today for this conclave on financial inclusion. Our Honorable Minister, Panchayat and Rural Development, was supposed to be here today, but because of some sudden engagement of government-related works, he couldn't be present here today. So I'm replacing him for this occasion. So I'll basically talk about a little bit of this department, Panchayat and Rural Development Department, and how we are functioning. Because the Sa-Dhan is also closely associated with our program called NRLM, National Rural Livelihood Mission. in this regard, first of all, I'll say something other than NRLM so that you can have a clear idea. Our Honorable Prime Minister has been saying that we have to provide housing to all the rural people who are without a house, proper house. So that program is called Housing for All. And with that end in view, since 2016, this PMAYG, Pradhan Mantri Awas Yojana, Grameen was launched in the entire country. And we were fortunate to have around 19 lakhs houses for this since 2016. And so far, we have completed the construction of almost all the houses except about 6 lakhs. Recently, just about 2 months ago, 3 lakh houses were ceremonially inaugurated by the Honorable Chief Minister of Assam in presence of our Honorable PNRD Minister, and the remaining 6 lakh houses are likely to be inaugurated by our Honorable Prime Minister in about 2 months' time, before the end of the year. So, and this with that end in view, since our Honorable Prime Minister will be here before December, so we are working very hard day in and night to complete the houses. And of course, there will be few more people. In our survey, actually the survey was not so proper, because of which some households were left out. So the matter has been brought to the notice of the Government of India, and the Government of India has given us assurance that whatever households have been left out, Government of India will try to cover them as well. But then Government of India has also said that you should also make your own efforts. So that is why our Honorable Chief Minister of Assam has launched a program called Chief Minister's Awas Yojana. So in the initial year, first year, Honorable Chief Minister has decided that 1 lakh such households will be provided such houses this year. That means in this financial year, that is 2023 and 24. And every year, 1 lakh households, those who are left out even now, they will be provided houses, similar houses, but the name will be Chief Minister's Awas Yojana. But then Government of India has also assured that they will try to accommodate those households who have been left out. So this is one story about the Prime Minister Awas Yojana. Then if we talk about this MGNREGS, then we'll see that in the last few years we have achieved quite a bit. Last year, in the year 2022 and 23, we generated roughly 789 lakhs of percentage. And in this financial year, so far, we have generated 467.26 lakh percentage, and which is going to be at the end of the year, which is going to be much more than last year. Because the labor budget so far, for the last year it was 792 lakhs, and this year it's been 600 lakhs, but it is going to increase in the next few months. So that way, we can imagine, or we can see the amount of money that has been pumped into the state of Assam. I'm not talking about the rest of the states, since I don't know the figures for them. But for Assam, I can say that, last year, 789 lakhs were pumped into the state on the MGNREGS, and this year, so far, 467 lakhs have been pumped into the state. So this is not a mean amount. It's not a very small amount. If we come to the ASRLM, in nationally it is called NRLM, but for the state of Assam and in the state it is called ASRLM, that is Assam State Rural Livelihood Mission. So this is the mission which has been going on for last several years, and I'll just talk about a few important highlights of this program, how this scheme has been implemented in our state, and what are its achievements and what are its weaknesses, if any. So first of all, I can tell you that, in our state, 40 lakh women have been brought under the covers of self-help group program. That means roughly about 4 lakh self-help groups are there in the state. covering a total of 40 lakhs women. This is not a very small achievement. 40 lakh women have been organized, and many of them, you'll be later on towards the end of the presentation, I'll show you how many of the women have become lakhpatis. So the Government of India, the Ministry of Rural Development has given us a target that we should try to, increase the income of the self-help group members. So last year, we brought around 3 lakhs women under this category. They were earning more than 1 lakh. And this year, we are planning that it should not be a minimum, it should not be just 3 lakhs or 4 lakhs, it should be around 10 lakhs. So we are working with that end in view, and we are confident that we'll be able to achieve our target. I'll just highlight some of the achievements. If we look at the number of self-help groups promoted, last year we promoted around 13,881. That was our target, and however we achieved around 21,412. That means our percentage of achievement was 154. Similarly, number of households mobilized into all the SHGs during last year, during the year 2022-23 was 763,250, and this year it's been, so far, it's been 2,53,164. Then number of revolving fund provided, number of SHGs provided revolving fund, during the last year it was 13,371, and this year it's been 29,948. So achievement is about 220%. Amount of revolving fund provided, last year it was 2006, and this year it's been 6,739 so far. That's mean the achievement is 335%. So that way, if we see the number of SHGs provided community investment fund, last year it was 23,219, and this year so far we have achieved 14,567. Another important aspect of this movement is that during current financial year, our target of mobilizing self-help groups is about 2 lakh, and so far we have achieved around 1,79,481. Number of self-help groups provided revolving fund, target was 8126, and we have achieved 9,792. That is achievement percentage about 120%. Amount of revolving fund provided during the financial year 23-24 is 2031 lakhs, and we have achieved 2,250 lakhs, that is around 110% of achievement. One important aspect is that we have about 11,625 VOs in our state, and the amount disbursed to these VOs is about 15,734 lakh. In this regard, I want to bring to your knowledge an important program, or the program which is going to be held on 17th of September. Our Honorable Chief Minister sir has set a target that we'll be planting 1 crore saplings on that particular day in about 3 hours time. So it will be a world record. So and Honorable Chief Minister sir has said in the remaining 3 years, another 4 crores saplings will be planted. Remaining 3 years, meaning up to the year 2026. Because Honorable Chief Minister has completed 2 years term so far. In this term, he has completed 2 years. Remaining 3 years, the target is another 4 crores. The 17th of September, we will be planting 1 crore saplings in the entire state. So that will be a record in itself. And in the same manner, we have also decided that, like ASRLM or the NRLM should also plant saplings. We have been giving saplings to these self-help group members, SHG members, and we call the program as Ezupi Gospuli. So, 1,307 elderly self-help group and 505 have received revolving fund in the last 1 year. Another thing is that, number of SHG that have to be accessed, bank credit, target for the last year was 1,34,430, out of which the achievement is 1,34,581, 100% achievement. Amount of bank credit to be accessed by SHGs in crores is at 1,540 crore, and we have achieved 3,236 crores, that is an achievement of 210%. If we see the credit linkage year-wise, since the year 2016-17, we'll see that in the year 2016-17, only 159 crores of credit were given to the self-help group members. In the next financial year, 17-18, an amount of 167 crores was released to the self-help group members. Next year, 171 crores. There has been a constant rise in the amount of credit given to the self-help group members in the state of Assam. In the next financial year, that is 1920, 358 crores were given to the self-help group members, and next year, that is 2020-21, 799 crores were given to the self-help group members as credit. In the next financial year, that is 2021-22, 1,870 crores were released to the self-help group SHG members as credit, and during the last financial year, a record 3,348 crores were released to the SHG members as credit. So there has been a constant rise in the credit given to the self-help group members. I'll just bring one small point to your kind notice. So we have been tracking the livelihood. We have introduced this livelihood tracking system through which we verified and we kind of conducted a survey with about 30 lakhs self-help group members, and we found that their annual income has risen to 57,957. And here we saw that some activities in the state of Assam, some activities are preferred by the SHG members, particularly livestock. About 35.93% women are interested in livestock, and they have been practicing rearing of livestock, various kinds of livestock like cows, buffaloes, and poultry, and so on. Second is the agriculture. About 23.76% of women are engaging themselves in agriculture. So this is a very interesting feature. Though we think that our Assamese women, they are mostly busy in weaving of our handloom and handicrafts, but we have seen that actually it is not. Livestock is the highest trade or is the activity in which 35% of the women are engaged, followed by agriculture where 23.76% are engaged, and followed by horticulture in which 14.92% of women are engaging themselves, followed by other non-farm activities 9.33. Handloom, interestingly, is in the 5th position where 7.84% of the SHG members are engaging themselves, followed by fishery 6.83. After that, handicraft 0.87, and other farm activities 0.3, and sericulture 0.24. So this in a nutshell is the story of NRLM in our state, and I've shown how the movement has grown from a very small epicenter, now it's grown everywhere, and almost whatever program we take up in the state of Assam. Today, as I mentioned, that our Honorable Chief Minister has set up a target of planting 1 crore plantations. There, our self-help group members are involved. Each of them will be planting 2 saplings on that day. So there's a particular app in which they have already registered, and in return for plantation of the sapling, they will be getting 100 rupees each. The idea is not to give any monetary benefit, but the idea is to ensure that the saplings survive. Survivors of the saplings, that is why this 100 rupees have been given against each sapling, and we believe this program will be successful. And I also think that like this movement it's grown momentum. Today we have 40 lakhs women or the as SSG members. In the years to come, I suppose it will be more than 1 crore or so, and eventually all the women will be covered under this movement, and the growth of Assam will take place. As it is, we have seen there's a whole lot of activities going all across the state. Our Honorable Chief Minister was very dynamic. You see him every morning. If in the morning he's in Guwahati, in the afternoon he's in Dibrugarh, and in the late evening he's in Dhubri. So this is how he works. He works 24/7, and I believe with his dynamism, the Assam is going to be one of the 5 most progressive states of the country. And with this hope and prayer, I end my short speech here. Thank you so much for calling me over here, and I extend my best wishes for the conclave. Thank you. Thank you so much.
Active association with you, because we are planning for a program to graduate the NRL members to entrepreneurs. So we are taking up a program with the central NRL, in the sense from the government of India, where Sa-Dhan will be a partner. Assam is also one of the states we are selected, and we will be doing a program which will be helping the SRL members to grow into entrepreneurs.
Thank you so much. Thank you. In this regard, I forgot to mention, since you are talking about entrepreneurs, our Honorable Chief Minister has decided that initially all his self-help group members will be given 10,000 rupees each to start with. After that, he has planned to give them 2 lakhs, and eventually he'll give them 25 lakhs. The idea is to convert these women who are already Lakpatis to successful entrepreneurs. So the plan is already afoot. Thank you so much once again.
Thank you, Mr. Munindra Sharma, for the speech. And now for the keynote address, I request Mr. Naveen Dhingra, CGM, NABARD.
Very good morning to all of you. On the dais, Mr. Munindra Sharma, Secretary, Rural Development, Panchayati Raj, Government of Assam, Shri Gigi Maranji, my senior colleague from NABARD. I really enjoyed your presence here, sir. Madam Carol Patero, CBO, Ujjwal Small Finance Bank. Manoj Nambiar ji, MD Alone. Anjan Das Gupta ji, MD Asa International. Sarat Chandra Das, MD Grameen Development Finance Bank. Manjunath Sharma ji, MD Nightingale Fenset Private Limited. Madam Sunita from Reserve Bank of India. all my other distinguished friends from the industry, bankers, practitioners, stakeholders, it's really an honor and a privilege for me to be a part of this August gathering, where we are going to discuss the whole day the way forward for taking Northeast to the next level as far as financial inclusion and the microcredit sector is concerned. I know the topic given to me was different, but definitely I'll touch upon that topic also. But before that, I would just like to recollect, and I request all my senior colleagues who are here, because I remember there is one movie which had come, which was produced and directed by Mr. Manoj Kumar, late Mr. Manoj Kumar. If you remember correctly, it was Roti, Kapda or Makan, right? That was summarizing the requirement of our rural people at that time. But now definitely the development has taken place and our people are gone beyond that basic requirement of having a roti, kapda or makan. But definitely there are some pockets where such need still exists. We have gone beyond that. We have gone, I'm happy that Mr. Munindra Sharma touched upon housing for all. That was one of the objectives of the Government of India and also the state government. But we have gone beyond that. They want a proper livelihood. They want health services. They want education services. They want so many things now. Roti, kapda or makan was the basic necessity which definitely has to be met, and every government strive for it, and we all stakeholders look for providing that to our people, to the vulnerable section, to the people who are residing in the rural areas or even in the urban poor. Now, having said that, I would like to just say that microcredit sector, as we all know, because since we all are practitioners, it is directly related to the overall health of the economy. If anything goes wrong with the economy, we have seen the pandemic, we have seen the COVID time, it affects negatively to all of us. Further, the microcredit is a no collateral line of credit to the people. We know that. Now, as we say about that, I would like to put some facts and figures in front of you before I come to my way forward and how to go about. As on 31st/3/2023, that is the financial year which has ended now in the March 23, there were 6.6 crore borrowers under the microcredit sector. The total outstanding is somewhere 3 lakh crore plus to these borrowers. Compare this to the credit card sector. The credit card normally all of us keep in our pocket. We have around 8.5 credit cards in the country. The total credit spent is 1,37,000 crore out of these 8.8 crore credit card that we have. Now you compare these two industries. We have a microcredit industry which is larger than the credit card industry. But having said that, you please try to visualize the innovations that has taken place in a microcredit sector and the innovations and other product diversification which has taken place in a credit card sector. Because we all are practitioners, we know very well, so I will not elaborate on that. But the credit card sector is moving much faster as far as innovation is concerned, product diversification is concerned, and so many other things which are happening in the credit card sector. Why can't we have a similar innovations similar product diversifications in the microcredit sector. We need to ponder over this point. We need to think about this point. Now, this was one data point I just wanted to share with you. As far as the data point for the Assam as a state is concerned, this figure is as on 31st/03/21. I do not have the latest one with me, but there are 26 lakh customers in the microcredit sector in the state of Assam. Somewhere around 40 plus lenders are working in state of Assam in the microcredit sector. 12,500 crore is the outstanding amount as far as the microcredit sector in Assam is concerned. I don't want to dwell on the problems which we all know of the Assam microcredit issues, because that is for everybody to know. And post Assam microcredit issue, there was a legislation and there was a scheme which came from the state of Assam on the Assam microcredit relief scheme, divided in 3 parts. We all know about it, and we know that it was a support from the state government to boost up the sector. Now, we know that the microcredit, I've said it right in the beginning itself, it is basically a very, very small type of a loan for a section of the society who is looking to meet its basic necessities and basic requirements. Now, if it is not properly met, or if the overall level of the economic performance is not up to the mark, that poor person is not able to generate further income out of the microcredit which has been given to him or her, and in turn what happens, he moves to meet his other requirements to the next borrower. So we have this problem of multiplicity of borrowers, multiplicity of lenders to the same borrower. Instead of taking from one lender, that person is forced to go to multiple lenders asking for money, and somehow it is, as the industry is there, we are in the industry, we are doing business. So in our enthusiasm to garner more and more customers, we don't hesitate to lend him further. Because my business target has to be met, my agent has a business target to perform, he has to garner more and more customers. He never bothers to see that how much money that poor person has already borrowed. Is he having an enough repayment capacity to repay? I am only concerned to give him the money. Take it. Because this has come to me and I am ready to give it to him. So multiple lenders giving money to a same set of borrowers. That is the problem we all know, and because of which we got into a trap of the Assam microcredit. The trap was there. The trap is to such an extent that poor borrowers were asked to even give out their houses, give out the tins on their sheds which were there on their houses. Even the tins were removed from the houses. So the situation is, who created the situation? Whether it is the poor person sitting in the field, has he created a situation for himself of like this? Or who is responsible for that? Because we say that we are in a sector and we want to support the vulnerable group, when we want to support the poor people, we really understand that are we really providing that kind of a support or a hand-holding to the poor people? So that was one part. Then another, though the formal banking system has improved over the years, we have a good branch network in the country, and in also Assam and Northeast. We have BCs and BFs, we have other CSPs, but still there are some pockets where the banking industry has not reached. And because there is a low penetration from the banking industry, the informal sector still persists. The informal sector of lending still is there. That informal sector is friendly, it's comfortable, it is accessible, and they are able to depend on that informal sector. But definitely informal sector has its own negatives: exorbitant rate of interest, exploitation, pressures, all those things are there. But along with formal, the informal sector is also there. Now, once we touch upon all these problems which are there with the people who are really in need of a microcredit, now I will go further to just suggest some of the way forward for this. Now, we really need to focus on a group lending model, which was promoted and popularized by NABARD as an SHG bank linkage program, which has its own components of group dynamics, which has its own components of financial discipline, which has its own components of hand-holding, skilling, capacity building. So that group model of lending has to be taken as one of the tools for a way forward. I won't elaborate much because I know paucity of time is there. So I'll be just touching upon the points. For further discussion, you are all welcome to come and visit our regional office. We can have a thorough discussion with you. All the individual stakeholders who are sitting here, you are most welcome to visit my office and have a thorough discussion on the issues. Another thing is the cluster-based and product-specific. Can we identify a particular product as an institution? Why are we only concerned about only credit? Why can't you take up as a credit plus approach to identify a product in a cluster base and try to promote a cluster around that product and do all kinds of activities which can be done from your side by taking help from the institutions like NABARD, RBI or state government. Let's create a synergy of all the stakeholders and you take up the role of a nodal focal point around a product, around a cluster, and develop that area with total support, total financial support from your side. Let's create models like that. Another aspect is the financial literacy. I think we all know about that, how important it is, and especially more important for a sector like microcredit. We really need to push up. NABARD is supporting various banks, various institutions on conduct of various awareness programs on financial literacy. We are there, we can support more. You can approach us for taking money from us for grant, for conduct of financial literacy programs in your area of approach. I have already spoken about multiplicity of multiple people, multiple lenders giving money to the borrowers. There we need to have a self-control mechanism. How do we do that? How do we create a mechanism among ourselves that not many people are chasing the same borrower? Can we create any mechanism on that? Further, as I said, the microcredit thrives in a very positive economic environment. In case there are some issues like natural calamities or any other issues are there, do we have a well-established restructuring model as far as loans under microcredit are concerned? We need to develop restructuring models in this direction. Further, I think there is a very good concept known as a family credit plan or holistic financing. Can we adopt that also in our day-to-day functioning? Can we interact with the borrowers, with the customers about their holistic financial requirements, not only focusing on how much do you want? Can we create that concept of a holistic credit plan wherein all his basic requirements, education, health, livelihood, house, travel requirements, remittances requirement, whether those requirements are met by us. Simply don't be tailored, guided by what he is asking. Ask him, do you have anything else? Create a holistic credit plan for him and then fund him. Over the years, you don't have to give him everything together, but you can stagger your lendings and try to build up a holistic credit plan for a borrower so he remains in your fold for a longer duration. Because you are trying to cover all his requirements. He need not move further, he need not go anywhere else. He is there with you for all his credit requirements. Very important, are we conducting research to understand where this whole scenario from the demand side is moving? Supply side is in my control. I am providing the finance, I am providing the credit, it is there in my control. But are we doing any kind of a research on the demand side of this sector? What do they want? How do they want? Can we have a simple straight-jacket approach to every problem that we face? We cannot. Now, just now Mr. Maninder Singh was mentioning about that livestock is the biggest activity among the women folk in Assam. Can we have a similar kind of a repayment system for livestock business? We have to evolve. When the lactation period will be there, when the milking will be there, whether the cow is giving a milk, whether he is able to generate some income out of it or not, when do my repayments will start? So we have to do a particular kind of a research and ongoing research under the sector to understand the client, what he wants, in what shape he wants, how much he wants, how much can he repay, does he require a gestation period? We really have to build on that. Further, we all know FinTech has a very important role to play. Really need to strengthen that. FinTech, definitely, it is providing a lot of advantages in the urban areas. In the people, to us, we are very comfortable with our mobile. We are doing a lot of UPI payments, receipt and everything we are doing. Whether the same service has been provided to the rural people. How comfortable are we with that? So we need to come out with the FinTech penetration in the rural areas. How much we have done that? What needs to be done? Further, financial inclusion means giving some different kinds of products. It is not only credit. We need to talk about insurance. We need to talk about pensions. We need to talk about remittances. Are we doing that? How much is my business portfolio is towards these other products? Or I'm only on credit? We have to look into that also. And I suggest, because these are the other products under financial inclusion are equally important for an inclusive growth of the rural people. Now, listening to the client, I've already said we need to do that. So we also need to look at, that is for the institutions like NABARD and the state government. I'm happy that Secretary Government of Assam, Mr. Sharma is here. Infrastructure development. The need for having a proper infrastructure development in the rural areas. We have done a lot. NABARD has supported somewhere around 12,000 crores towards the infrastructure development of state of Assam. This year also we have an allocation to give another 3,000 crores. Definitely, as Mr. Sharma was mentioning, that Honorable CM has a desire to bring Assam in the top 5 states in the country, but I can mention that NABARD under the RIDF is already under the top 5. We were not there in the top 5, but with last year's performance, we are there in the top 5 as far as infrastructure funding is concerned to the state of Assam. Now, once we have with infrastructure. I know, we all know the importance of good roads. We know the importance of bridges. We know the importance of having a good connectivity. We know the importance of having a proper health system, proper education system. Once all these things are taken care by the government, the economic activity and the economic development takes place in that area. And accordingly, the microcredit will thrive. And with this, our people who are there, our labor group for whom the whole day we are going to discuss and talk, they will get benefited and their economic development will take place. And definitely at the end of it, we will be able to honor our Honorable Prime Minister's slogan, Sabka Vishwas, Sabka Vikas, और सबका विश्वास और सबका प्रयास. इन चारों के साथ जब हम आगे बढ़ेंगे, तो I am 100% sure that all of us will definitely be doing justice to what we are doing and will be contributing towards the economic development of the country. Thank you very much for giving a patient listening to me. It was an honor to speak in front of exclusive fraternity under the macro credit. I love to get associated with you more. You are all most welcome to come to the regional office of NABARD and have one-to-one discussion with us. Thank you, Madam Sir, for giving me this opportunity to share some of my thoughts. Thanks a lot. Thank you.
Thanking Mr. Naveen Digra for the keynote deliberation. And yes, now since we have come to the conclusion of the inaugural session, so the giveaway the vote of thanks, I would request Shri Sharat Chandra Das, MD, Grameen Development and Finance Private Limited. But before that, we would like to give away a special gift to some of our respected dignitaries present here, since they will be leaving early. So yes, I request Gigi sir to kindly give away the gifts to Mr. Munindra Sharma, IAS Secretary, PNRD Director, SIPRD. And Ms. Sunita, AGM, RBI. So now to give away the vote of thanks for the inaugural session, I request Shri Sarat Chandra Das.
Thank you very much. This is to offer my vote of thanks on behalf of Sa-Dhan to the honorable guest and the dais. First of all, I'd like to offer my vote of thanks to Mr. Munindra Sharma sir, who actually he has already left. So he has given the details of the department's activities, and especially three things he has touched on, like housing, then SHG credit. I think it was a big thing that in last year, there has been 3,000 crores of loan to the SHGs. And he has also given the details of the plantation plan that the ministry has taken out. And he has given the insights, many insights, and many of the things actually concern us also. So I would like to offer my vote of thanks to Munindra Sharma sir. Then we have Naveen Digra sir, CGM NABARD, and as the keynote speaker, and I would like to offer the vote of thanks to you sir. And you have actually covered almost everything on microfinance, and you have stressed mostly on the innovations in the microfinance that still is required, and you have also touched upon many things of microfinance, like we have to go back to basics, like you have talked about group lending, where from we started, but somehow it has moved to different directions, so we have to back to the basics. So you have given details of the sector, how you should move. You also have given the way forward. So I would like to offer again vote of thanks to you sir. And we have also Madam Sunita from RBI, and we offer vote of thanks for giving us this time. And we have representatives from different microfinance institutions and also banker we have. So we offer vote of thanks for being present in the inauguration program. And of course, we have programs followed by this program. There are sessions, so we'll be deliberating more on that. So finally, I again offer my vote of thanks on behalf of Sa-Dhan to all of you. Thank you very much.
So now we are going to have a small tea break, and we will be having the next session after 15 minutes. Thank you so much. Ms. Shruti Joshi, she has an industry experience of about 18 years and worked with organizations like HDFC Bank, Bank of America and ICICI Bank in the field of analytics and credit policy. So I request Ms. Shruti Joshi to kindly start with the presentation. And I request Gigi sir to kindly felicitate Ms. Shruti Joshi before we start off with the presentation with our very own Phulam Gamusa.
Good afternoon, everyone. I would like to thank Sa-Dhan for this opportunity to make a presentation today. And I would also, I'm delighted to present in front of such an esteemed audience today, industry veterans and people who have who are, who have done amazing work in their own fields. What we aim to bring today is some of, we heard some of the speakers like Dr. Molinder Sharma ji, Naveen Dhingra ji speak about innovation, research, bringing data to the center and making decisions. We hope that this presentation through the time series analysis helps give a perspective on how the microfinance industry is doing overall, how the states are performing and how the states of Northeast are performing, and where the opportunity lies. So that's the overall idea of the presentation. With that said, I'll begin. So overall, if we look at the microfinance industry today, the industry stands at around 3,56,000 crores. This is the entire microfinance industry. Sectorally, if we see the NBFC MFIs have the highest presence at around 40%. They have around 1,43,000 crores share in this portfolio. In terms of disbursement, just last year, the industry has disbursed around 3,19,000 crores, which is, and again, phenomenal disbursements have happened by both the NBFC MFIs as well as the banking segment of around 1,24,000 crore and 1,16,000 crore each. In terms of 90 plus delinquency, and here when we are talking 90 plus delinquencies, these delinquencies include all the buckets except closed and written off. The industry stands at 11.52% today. NBFC MFI is around 10.4% and private sector banks around 14.67%. So that's how the microfinance industry is centered today. Like some of our esteemed guests have mentioned, amazing funding has happened in this last 1 year. The industry has increased overall by about 45% on a year-on-year basis if we look at how disbursements and portfolios have moved in these last 5 years. In terms of state, since we are now going to talk about some of the top states. The top states today for microfinance industries are the states of Bihar, followed by Tamil Nadu, Uttar Pradesh, West Bengal and Karnataka. Bihar, which was at number 3 position back in 21, has moved to number 1 position in these last 2 years. The states of Uttar Pradesh has moved up to number 3 position, whereas the states of Tamil Nadu, West Bengal and Karnataka have lost their positions to number 2, 4 and 5 respectively. If we look at the state of Assam, and we are doing this comparison just for the northeast states, we see that Assam, Tripura, Manipur and Arunachal Pradesh have maintained their respective position of 1, 2, 3 and 4 in these last 3 years. Having said that, we are wanting to do a time series analysis specifically for these 4 states of the northeast. If we look at how the disbursements were back in 18-19, The industry, the overall disbursement for these 4 states were at around 17,000 crores. By April 1920, it fell to around 14,570 crores. As the time period moved on from 18, 19, 20, 21 and so on, and where we stand today at 22, 23, the overall disbursement for these 4 states are at around 4,500 odd crores. Amongst this, private sector banks have disbursed around 2,800 crores. NBFC MFIs around 1,400 crores and small finance banks around 276 crores. So that's how much, if we look at a time series view, the disbursement for these 4 states have fallen. In terms of portfolio outstanding, if we see, portfolio which was at around 9,500 crores went up in March to around 13,800 crores. Having said that, if we follow the time series chart today, the states are at around 8,697 crores. Amongst this again, private sector banks have the highest outstanding at around 5,100 crores, followed by NBFCs at around 2,300 crores and SFBs at around 1,600 crores. So this shows that overall disbursements have fallen down in the state. Portfolios have maintained. So while disbursements have gone down by almost around 73%, the disbursements have gone down by around 7%. And that's mainly because a lot of the book of the microfinance industry is in the 180 plus bucket today. New disbursements are not happening to the extent of what they were happening a few years back. In terms of delinquency, and delinquency is going to sort of complete the picture here. Delinquencies which were at 0.39% followed by 0.51% have seen a substantial increase. Today delinquencies are at almost 37%. So it shows the rise of how delinquent the customers have become and the repayment capacity constraints that are facing in these 4 states of the Northeast. Having said that, are we now looking at an increased leverage? The answer probably is not so much. If we do an overall leverage analysis, and the way we are defining leverage is by number of customers having loan outstanding of 1, 2 and 3 respectively. There were around 58% customers who were having 1 loan outstanding and 28% having 3 loans outstanding back in March 21. The numbers have gone up a little bit. 28% has become 37%, and 58% number of customers who are having 1 loan outstanding has become 50%. Having said that, the picture is not completely bleak. We are seeing new to credit customers as well in certain districts. We are seeing some positive ray of hopes. But as the previous speakers did point out, the leverage does need to come down from customers having more loans of more than 3 loans, more than 2 loans. Recently, the Bureau has also started getting household income and EMI. If we do an overall comparison of household income and EMI for these Northeast states, we are seeing they are very much in line with overall how the income EMI ratios are looking across states pan-India. So data is not looking very different for Northeast, so that's a very promising factor in itself. If we look at the opportunity landscape, because as a bureau, given the data, we try to look at where exactly the opportunity lies for specifically Northeast, which are some of the areas doing well. In this last 1 year, we have seen a couple of districts, and we have looked across the states of Assam, Manipur and Arunachal Pradesh, showing some bright spots. Here, if you see, for example, this state of Viswanath, it has, with a disbursement of almost 69 crores, it has grown by over 4%. The portfolio outstanding is around 162 crores. The state of Buxa, for example, which has a portfolio outstanding of 118 crores, has grown by 41%. Delinquencies of 1.5%. The state of Dhemaji, and I apologize if I am pronouncing it incorrectly, with a disbursement of 59 crores, outstanding of 119 crores, has seen a growth of 3%. So these are some of the gems, so to speak, which we are finding out from the Bureau data. As the previous speaker pointed out, research, having an understanding as to where these bright spots are would surely help in the development. The 90 plus delinquencies given over here, we have calibrated only up to 179. This is mainly to highlight that, these are the areas which are doing well in the recent past. If we start looking at these districts with the 180 plus calibrations as well, we don't want to include the previous portfolio which is not doing well. Manipur similarly also has certain districts like Thobal and Imphal West, Arunachal Pradesh, Namsai and Lower. The portfolio outstanding, however, is on the lower side. The disbursement you will see is very similar to the portfolio outstanding in these areas, because probably these are the districts which have come up in these regions. Delinquencies obviously are not calibrated, because these are recent disbursements, but these are the recent good spots that we are seeing from the bureau perspective. We urge the players here, the lenders here, to use more of the bureau data in doing their lending. Overall, if we see, the Northeast 4 states have an average portfolio outstanding of around 2,000 crores, whereas the industry top 10 states have around 29,000 crores. So this is a big area of opportunity for the Northeast states. The delinquency, however, is very high, like we have seen in the past, around 37%, whereas the industry 90 plus delinquency calibrated 180 plus and above is at 9.67%. The penetration in Northeast is very low at around 18%, whereas industry penetration is as high as 35%. So this also goes to what the previous speaker was saying in terms of fintech or digital penetration. Are there ways, to penetrate further, to innovate further? The overall average institutions, and when we are talking of the average institutions here, we are only talking of the live institutes, lenders who are present today, stand at 15, whereas the industry average is 21. Overall, this presents a picture that there is a huge area of opportunity in the northeastern states. If given a chance, there is a way these northeastern states can thrive. They have thrived in the past. They have gone through a very bleak time. Having said that, we are looking at certain areas which have come up surprisingly well, where which are the gems or the opportunity areas. They are maintaining delinquency, amazing amount of disbursement happening in this area. We would like to leave you with this thought, saying that these are probably the areas of opportunities, and the time has come for the states of Assam, Arunachal Pradesh, Meghalaya, etc. to do well and come back. As the previous speaker said, the vision of the Chief Minister is to be one of the top 5 states. We don't see that being far behind, at least from the data perspective. Thank you so much for the opportunity provided.
Thank you so much, Ms. Shruti Joshi, for the presentation. And now for the next. And yes, I request Gigi sir again to please come over here. And give away. I request Mr. Saibal Paul, Associate Director, Sa-Dhan, to kindly give away the special gift to Ms. Shruti Joshi, Head of Insights, Equifax. And now for the next presentation, which is on developing supportive finance architecture for the MFIs of Northeast India, the perspective of State Bank of India. I request Mr. Dhrubacharan Ball, GM, SBI.
Good afternoon to all. Thank you, Sa-Dhan, for giving this opportunity to position State Bank of India in Northeast required to MFI financing and other things. You know all about at least State Bank of India having more than 23,000 branches, $217 year of and catered to 48 crores of customers, 1/3 of our citizens of India are banking with us. On Fortune 500 company having different locations and presence in each and every district of India. I cannot say each taluka, but each and every district of India presenting itself. And northeast, we have 805 branches, 3,750 ATMs, 4,750 CSPs, presence every 112 district of northeast. In each district we have present in there, and it has been served by. It is divided into 5 modules, 2 networks, 90 DGMs. And as I am GM of the network, I am looking after 9 districts of Assam, Manipur, Meghalaya, Tripura, Mizoram, Nagaland, and another network looking rest district of the Assam and Arunachal Pradesh. This is the brief background of our position. And if we go to the market share of Assam, this is the market share of all the northeast. It is average 40% from 36% to 63% is our market share. Even if we require some collaboration with MFI for development, that is one of the reasons I am coming here. Actually, we have in 22,000 branches, 805 branches in northeast. Even if we are not able to reach the nook and corner of the country, there are many. I think northeast is a credit stressed area. Minimum 6,000 crores potential is available here for further growth. This is not possible, and we can make it directly. This is one part. Then next is financial inclusion part is there. To include everyone, we are able to open the bank accounts. Jan-Dhan accounts we have opened. We have 4,750 CSP. Where you can reach everywhere, but it is not possible to lend. For that reason, we require our reach and expertise of MFI, because they are doing a great job in India since last 5-7 years. And myself, I am last 5 years I am actively dealing with MFIs in financing. So this is not a new subject to me. Another is the expertise, next of expertise. We are expertise in financing, but you are expertise in reaching to the nook and corner. You are meeting every people, you are reaching to the community, wide reach. We cannot reach that people because I visited 5 states. There is really communication is a problem and reaching is one of the problems. Here distance is measured by hours. It is not by kilometer. This is one of the unique things. Then SBI has the financial resources and you have the reach. This collaboration is definitely required. And one case, in our case, our NPA is not in MFI 7, our inputs will be not less than 10%. In Assam, it is around, in Guwahati circle, it is around 30%. But your NPA, delinquency is hardly 1%. It was less than 1%. Pre-COVID, it was up to 3 to 4%. Now it is after COVID. But my observation is less than 1%. This is one of the area. And overall, we want to increase our market share. This is the one where you can collaborate, we give our support, and where we can increase our market share. This is the collaboration. Actually, MFI finance is not new to us. From the beginning, we are financing. We are financing through SHG, through GLG, through small ticket loans. This is going on from the beginning. Before NBSC coming, we are also financing that. But now, I am going not to direct finance, I am going to indirect finance. Through MFI, how we can, which product and how we can offer and what are the minimum criteria, that just I want to go through this. One is finance for on lending. We are giving you money as per your eligibility, as per your criteria, as per your evaluation. Then you go for further you are financing to your customers, MFI. Next is direct assignment, what we otherwise call pool purchase. You have purchased asset, you have create some pool, you have create some asset, and you take it further. We buy some portion of you, then you can re-lending again. This come to our books. Your asset come to our books. Another is co-lending. We simultaneously we lend together. Anyway, you identify the customer, you give some person, we give some person. These three way we are financing to MFIs. These are the eligible for MFI financing: societies, trusts, companies, NBFCs, NBFCMIs, NGMFI also are financing, where there is minimum 50 SHG, 500 individual in case of only to individuals. These are the minimum criteria. These institutions we can finance them for microfinance lending. These are the some policy of the pool financing. State Bank can purchase from pool asset, MFI asset from any institution, commercial bank, financial institution, small finance bank, NBFC, MFI, we can purchase from them. And here, maximum permissible exposure, suppose is 90%. Suppose you have 100 crores of portfolio you want to give us, we will take 90%, 10% in your book. Then at par only, there is no premium, no discount. What loans you are giving, this much we will take. Interest rates, what you are charging to interest rate will be maximum 10% more than MCLR, our MCLR rate, and 14% above our EBLR rate. External rating for NBFC it is A or better. For MFI financing it is triple B minus or better. This is the minimum requirement of pool purchase. Business vintage of that MFI should be minimum 3 years. Maximum exposure we can take in MFI at 15% of the asset what they are managing. Maximum we can take 15%. And entry barrier for NBFC it is minimum 100 crores. Your portfolio should have minimum 100 crores. If MFI it is 100 crores. NBFC it is 1000 crores. If it is MFI it is 100 crores. And receivable loans should be 7 years. What normally we are taking 2 years. I think MFI it is not more than 2 years. So we are taking 2 years maximum. And after that period it is 18 months, 19 months, 20 months maximum. This is the receivable period. Pricing will be linked to our 2%, 3% above EBLR or MCLR, depending on the situation. Then pollution co-lending. This is minimum 20% share of a loan has to be borne by the NBFC MFI. And all KYC norm of RBI has to be qualified. And for customer, NBFC is single point contact. He will not come to branch. Customer has to identify the MFI. And 20%, minimum 20, 25%, 30% depending upon the situation. Loan should be shared by bank and MFI, and all transactions should be routed to escrow account. For this also same thing. For externality triple and above, for agri MFI loan, it is one up to loan up to 1 lakh, triple B minus. Net worth should be 10 crores for NBFC. If it is housing finance, then 100 crores. You will buy net on fund maximum up to 8 times. It cannot be more than that. Capital adequacy is 15%. Minimum 2 years experience of required, and loan coverage ratio should not be less than 50%. This is the basic criteria of co-lending. If you have any opportunity, we can contact us. And our desk officer is looking after this in Northeast Circle is also in this MFI. I request you to please take the benefit of this. And this is the loan portfolio of, I think total all in a portfolio of 2022 is MFI loan was 1.35 trillion rupees. SBI MFI exposure is as of 31st March is 9,428. In this case, we are not including the direct loans what are given to them. This is only pool purchase and co-lending, 9,428 crores. And Northeast NBFC share is only 2,245. Actually, there is great opportunity. And this is the exposure of NBFC. Assam, other state, Assam and Tripura have some sizable, other state which is not sizable till now. And in Northeast Circle, our exposure is very little, only 30 crores. Only 4 MFI we have financed since with our exposure only 30 crores. There is a big opportunity there. We are here. I talk with Associate Director. We can have a meeting here. How we can do it. We have to make a date, fix a date, and we all, MFI, you are working in Northeast. We have to make a discussion on how we can go further. We want to also increase our exposure to a large extent. And this is a time of collaboration. Both you have some expertise, you have some strength, and we have some strength. Let us collaborate it and go to further and increase the credit uptake in the Northeast area. This is from my side. Thank you. Thank you very much.
Thank you so much, Mr. Dhubrachandra Bal sir. Now I request Saibal sir to kindly give a very special gift to Mr. Dhubrachandra Bal. And yes, to tell you about Mr. Dhubrachandra Bal, Mr. Dhubrachandra Bal has a total banking experience of 28 years in SBI. His last assignment was at Bhubaneswar Circle, working as Deputy General Manager, looking after agri and financial inclusion, which includes SHG and MFIs. At present, he is looking after 5 states and 9 districts in Assam. So now we would like to further move ahead with our first thematic session on the status of the microfinance sector in the region and the way forward. And we have our moderator, Mr. Abhijit Sharma, IIBM Guwahati. We have Professor Abhijit Sharma with us, who will be moderating the session. Professor Abhijit Sharma has a Master's in Urban and Regional Planning from School of Planning, CEPT, Ahmedabad, and PhD from Guwahati University. His area of work covers financial systems, livelihoods, entrepreneurship, microfinance, financial inclusion, micro-enterprise development, and urban development issues. So we would like to felicitate him with a Phulam Gamusa. And I request Gigi first, sir, for that. And now I would like to invite our discussants for the thematic session 1. Mr. Carol Furtado, CBO, Ujjivan Small Finance Bank. Ms. Carol Furtado. Ms. Carol Furtado is the Chief Business Officer of Ujjivan Small Finance Bank, a prominent face of women in banking. She comes with 26 plus years of banking experience in retail banking and NBFC domains, with expertise in leading business, banking operations, credit and people functions. Carol is a key member of the leadership team that laid the foundation and built Ujjivan. She was instrumental in the recognition of Ujjivan as a certified great place to work. So we'd like to felicitate her and welcome her with her Phulam Gamusa. And I request again JC sir for that. I'd like to invite our next discussant over here, Mr. Manoj Nambiar, MD of Arohan Financial Services Private Limited. Mr. Manoj Kumar Nambiar is the Managing Director of Arohan. He has been a director since October 2012 when he was appointed as the Managing Director of Arohan. He holds a bachelor's degree in mechanical engineering from VJTI and a master's degree in management studies from JBI MS, University of Bombay. He has also completed the Strategic Leadership in Microfinance course from Harvard Business School, USA. Strategic means leadership course from INSET, Fontainebleau, France, and leading for impact from IMD, Lausanne, Switzerland. He has worked with various companies in the fields of business development, consumer banking and finance and microfinance across India. And I request GG sir to kindly felicitate him with our very own Phulam Gamusa. And he is currently the lead of the steering committee of the 37 MFI leaders in Assam, liaising with the state government on the AMIFIRS 21. So next up, I'd like to call our next discussion over here, Mr. S.S. Bhatt, CEO of FWWB. A very warm welcome to you, sir. So Mr. S.S. Bhatt is the CEO of FWWB. Prior to this, Mr. Bhatt was the advisor and chief general manager of Canara Bank, working as the country head overseeing the priority credit and financial inclusion wing of the bank. Mr. Bhatt has over 35 years of experience in Canara Bank, developing expertise in banking. So I request GG sir to kindly felicitate him with her Phulam Gamusa. Next up, I'd like to call Mr. Anjan Das Gupta, MD of ASA International Microfinance Private Limited. Mr. Anjan Das Gupta, Managing Director of ASA International India, is a finance and banking expert now, heading ASA International India Microfinance Limited as Managing Director. Before joining ASA International, he successfully managed a number of large cooperative banks. As Managing Director of an urban cooperative bank in Sikkim, he innovated banking to include microfinance, livelihood development schemes, and financial inclusion. The projects were identified as model schemes by the Reserve Bank of India and highlighted in the report of RBI's Committee for Financial Inclusion in the Northeast. So I request GG sir to kindly felicitate him. And I'd like to call Mr. Sarat Chandra Das, MD Gramin Development and Finance Private Limited. Our last discussion for the first thematic session. Mr. Sarat Chandra Das, MD of Gramin Development and Finance Private Limited. He is a graduate in agricultural science from Assam Agricultural University and holds a PG diploma in rural development. He is a certified expert in microfinance from Frankfurt School of Finance and Management and an MBA holder from the esteemed IIBM Institute of Business Management. During his 15 years of experience in the development sector and microfinance management, he has been an asset to the associated organizations. I request GG sir to kindly felicitate him. Also, he was associated with Rashtriya Gramin Vikas Nidhi, Guwahati for a period of 7 years. So now I request our moderator, Mr. Professor Abhijit Sharma, IIBM Guwahati, to kindly start off with our first thematic session.
Hello, okay, I need to keep on pressing. Good afternoon, everyone. I think we have an illustrious group of members here with huge experience working in the microfinance sector. And we have 2 members, at least I know, who has vast experience working in Northeast also. So I think I hope we'll have a good session today in terms of at least looking at a challenging prospect, particularly for microfinance in the big state of Assam for some time now. As you're aware, microfinance have been taking in a lot of clients, expanding outreach, in terms of clients, in terms of loan outstanding, and proving, and I'm taking Northeast as a focus, proving that people repay back. I have banker friends here, I'm from the banking industry, where this normally the refrain has been that people don't repay. But microfinance has shown otherwise. So the expansion. And particularly for the last few, I would say just before COVID, in fact, I think Assam was one of the highest or fastest growing region in microfinance. And I think that showed that, there is a lot of potential. But we have a lot of challenges. And we have a illustrious group of members, and we'll sort of tickle their brains, find out exactly what they feel about this. There is, on the one hand, we have places where there is large number of MFIs operating, particularly the lower Assam districts. And we have large number of areas still outside. A lot of states, I would say almost untouched, Arunachal included. So from the perspective of financial inclusion, how do we look at this? And particularly now with a new thing, which is technology, which is coming, as an added services. And how do we see this looking forward? So some of the questions I'll be posing to people, I think. So there are challenges, there are opportunities, but we have a short time. We have already, in fact, we are supposed to start at 12. But this is 12:45, so Saimal tells me we can go to about 45 minutes. So I will push it to 1:30 or so. There are a lot of questions to be asked, but I think we'll have to keep it within the 45-minute period. So let me start from a senior member who's also involved with the committee, which is looking at the what we call as default payments. For the government of Assam, there is a committee which has been set up, an MFI committee which has been set up, which is advising the state government on how to ensure that the MFIs do not get burned and the clients also get service, so both the parties are happy. So I would start with Mr. Nambiar. As you're aware that we had microfinance which had grown tremendously, particularly from, let's say, the period of 2012 onwards, and then we also had one institution which has graduated to a small finance bank, a whole lot of NBFCs which were operating in this area, in Assam. And then you had the act, which came in, and which was a dampener of sorts, particularly for Assam, which was the driver for the Northeast region. Now, given the fact that now this has been 2 years almost, how do you look at the scenario, taking it a little forward, microfinance, and from the perspective of financial inclusion, in the next 3 years, how do you see it petering out?
Thank you, Mr. Sharma, for the question. You're absolutely right that a market which was growing very well and the third best state in the country, even as recently as September 19, unfortunately went through a whole series of events which caused customers not to pay, and finally we saw the NPA numbers even as of today, but the NPA numbers went up to as high as 50%. Apart from the fact that the 12,500 crore outstanding came down to as much as 6,500 crores. But I think the sort of positive thing is the fact that in spite of the state assembly passing the bill on restricting the activities of the microfinance institutions, especially when it came to over-lending and in terms of collection practices. I think the key point is that the whole administration, the government understood
that there are RBI regulated institutions and state regulated institutions. And RBI has been very clear about the fact that as far as banks and non-banks are concerned, the jurisdiction is with RBI. And to that extent, the state really needs to talk to the RBI in terms of passing something which has implications on them. And so the news is that although the bill got passed, at least it's not been operationalized to the extent that it starts impacting us on the ground. So that is one big positive, given the fact that about 10 years, 12 years back in Andhra Pradesh, what happened caused customers to suffer for almost 12 years. And even in AP, the case that we fought in the High Court, with the government, after about 12 years, we won that case, where again the same thing has been highlighted, that the licensor regulates. So whoever has issued the license, whether it is RBI or the state government, essentially would basically, be the person who would give the guidelines. I would give full marks to the Honorable Chief Minister that in spite of the financial difficulties and the challenges which are there in the state, he went ahead and sort of honored the commitment which was made to the people that stressed MFI customers would get help. And that is what resulted in the MOU that we signed with him somewhere in July 21, and the final sort of MOU which was signed with 37 lenders. So as you know, it's a program, it's a flagship program of the current government. I think it is the first step that was taken when the standing committee was set up on microfinance headed by Ashok Singhal. And a lot of discussions, a lot of data that we shared with them, they understood that there are really three categories of customers who need to be addressed. We cannot have a moral hazard where only delinquent customers are actually being paid. So the first category, if you notice, is almost about 10 lakh customers who were regular as of March 21, who were paid their outstandings as of March 21, or the highest number in terms of 25,000 rupees. So that got completed by about March 22 in terms of the rollout which happened, and the Chief Minister himself actually started off the first district where the checks were actually handed over to the beneficiaries. Category 2 was where the government said we will clear the overdue amount. So anything between 1 to 89 days the government will pay, so that it is an assistance to the customers to actually get back to being regular. And that also, unfortunately, it would have started in April 22, but because of the floods, the whole program got delayed, and then finally we were able to close it by November 22. Category 3 is the big one, and there again, in fact, lakhs of customers got the benefit. Not only the benefit, but he went one step forward and actually even gave the incentives which were supposed to be given after the entire loan was supposed to be finished. So I think that shows the sort of soft corner that he has to customers of this particular category. Category 3 is a big one because there essentially the state government is supporting the NPA clients, where the NPA amounts as of March 21 were supposed to be paid. That's a big one, again close to 10 lakh customers and almost 3,500-4,000 crores which needs to be paid out. Unfortunately, again, because of a lot of other events and sort of delays which have happened, we've submitted the data now for the first row, which is up to 25,000 rupee balances, and we are expecting that payment to happen any time now. It could even happen as we are sitting here and talking. So all the processing essentially has been done. But to come to your point, I think we need to understand that Assam is the only state which has launched something like this in the independent history of India. This is the first microfinance incentive and relief scheme ever in the history of the country. A lot of loan waivers have happened on agri loans, MSME loans, and a lot of other loans, but this is the first state in the entire country to take that lead. And to that extent, I would really appeal through all of you to the customers that they need to understand that this is for stressed clients. It is not a dole out which happens to everybody, where if you have had the ability to pay, you should have paid up. It is not that you will wait for the government to pay, and obviously there is an eligibility criteria. It is not that all customers as of March 21 essentially will get their loans sort of repaid by the government. The government is doing it as a one-time step, a historic step, a very difficult step from a financial perspective. And I think that all of us as lenders and employees here in the sector need to communicate that to the customers down the line very carefully. Because the intent of the Chief Minister and his government is to ensure that this one-time action brings the sector back to a sense of normalcy, and it can see the heights which were there in 18-19, which is the numbers that we just saw. And even at that level of supply, from a financial inclusion index, if you look at the Northeast, RBI comes out with a financial inclusion index. Overall, India index is about 53, right? And Assam, I'm sure, while they've not given state statistics, but I'm sure Assam would probably be in that 35 to 40 kind of range. So the potential which is there, one of the best states in the country, September 19, with this impetus, all of us are hoping that the state becomes a much better state in the next year or two. Because in most states that we have seen, post a crisis, customers learn the fact that they need to pay, otherwise their credit bureau record would become blacklisted with an NPA tag, and it is in their interest to protect their credit records. So we are hopeful that in spite of the, as a company, we've been in Assam since 2008, and we have continued to be here. We have not run away after the whole issue happened. So that will more time for that implementation and that normalcy to come back.
Thank you. In fact, we also hope, because, and we hope that, there is also been a legacy in Assam of the credit market distortion happening. And the idea is hopefully that this will pass and we get into normalcy soon and not take that other route of, credit distorted markets. But one of the elements, and I come to Carol now, and Jeevan has been here for a long time, also as a small finance bank, prior to that also as an MFI. One of the grounds for this has been that, we have had many players working in a small group of people. So, in other words, we are having a whole lot of microfinance loans pass on to customers, which normally above all norms, breaking all norms. How do you think we look into this aspect? That is, what we call a self-regulation. That was one of the reasons why this cascading effect has taken place. Because you had one, some say people are having 5, 6, 7 loans run. So how do you, as a microfinance institution, feel? How do we do this self-regulation?
Good afternoon, and thank you for this question, Professor. Just to start off, I would also like to thank Sa-Dhan for being a very strong SRO, and they have been playing a huge part in regulating the microfinance institutions through the code of conduct, and also having a very good and strong customer grievance mechanism. Having said that, we also have the MFIN, which is another SRO. So with all this, and the credit bureaus which are in existence, it to a large extent regulates the number of loans given to a customer in this segment. We in Ujjivan have been in Assam, the Northeast areas since 2010, and we have a very long history in Assam especially, and from there on we've also moved to Tripura and Meghalaya. We have always taken a lot of caution when we get customers on board. So the age-old Grameen practices is still being continued. The customer group trainings, the group recognition tests, also checking from the neighbors and the groups to see the extent of loans taken by the customer. Because a lot of these loans, to a large extent, it is also given by money lenders. And one of the reasons why the local level checks are being done is because this is not captured in the credit bureau. But the group members get to self-select their groups and understand the extent of borrowings taken by the customer, and they select the group, and that is when we start giving them loans. So and the new microfinance regulations that also came into existence last April 22 has also played a huge part in regulating the space. We have seen during the COVID time issues come up, and like Mr. Nambiar also said, we did have state level issues, but I think that is in the past now, and we are seeing a huge revival taking place in this segment, of course with a lot more of caution, a lot more of regulation. And we in Ujjivan, our portfolio size also came down, but thanks to the government, they have been supportive. Though there were some things that happened in the past, but I think a lot of realization has come into existence, and we have been able to revive. We put together a very strong revival plan for Assam, and we are rebuilding. We want to participate in the growth of the economy in Assam, and also from there on, once the revival has taken place in Assam, move on to the other states in Assam and establish our footprint once again. We also would like to, as a bank, provide a full range of financial services to these customers, and it is not just lending. As a bank, we have the ability to do so, and our mission is to be in the space of financial inclusion as a small finance bank. And it's not just lending that we do with the customers, we also provide them a safe place to save their deposits. We also have insurance facilities and able to provide the requirements according to the needs of the customers. So, our team is well set, and we are now poised to take on the next level with a lot of digital capabilities and technology playing a major part. We have also introduced this app called the Hello Ujjivan app, which is a voice, video and vernacular app for our customers, where they can do banking transactions and also apply for loans through the app. But one very important thing in all that I have been saying is financial literacy is very important. And in this customer segment, financial literacy plays a very huge role. And to that effect, we have partnered with NGO to provide financial literacy to our customers and also help them scale up their digital ways of doing things. And that's how we will be scaling up our portfolio. We are here to stay, and we are here to do well.
Thank you. I think Ujjivan has been going on and been here for a very long time, like Arwan. One question that plagues in terms of financial inclusion is the area that we have in Northeast a lot of dark areas. And while the normal question would be that these are not viable because of low densities, and hence it will be difficult to supply. But nonetheless, there is also what we call as existence of, I would call it a strong social capital around a lot of these places. I'd like to ask FWB, since you also finance, and this has been a question which has been going on for quite some time, it's still relevant, I think. There is the fact that when we look at a standard way of onboarding people, institutions for wholesale lending, we go through what we call as a rating tool. But for, let's say, a stopgap, for people who are working exclusively in a local area, small intermediaries, for a very limited services, do you have any sort of mechanism to ensure that these guys are hooked in for some time, and then eventually, when it expands and scales up, then they're linked up? Do you have anything on your mind that and the question is, how do we expand outreach to areas where microfinance is not?
Thank you, Professor Sharma. Good afternoon, everyone. Thank you, Sa-Dhan and Gigi, for giving this opportunity. In fact, Friends of Women's World Banking has been working in this space for quite a long time. I think for the microfinance sector, it has been the main architects of building the strong foundation for the microfinance sector in terms of building the social capital and also the economic capital. I think that has been the story. Now the sector has grown, definitely, and many of us feel that yes, one is about the smaller organizations who are working in the grassroots and who are serving the customers with a social impact side of the mind. That's one segment of institutions. And the second segment of institutions are business oriented or commercial oriented, who are one is supporting the customers for the credit and also giving the following the regulations and see that the finance is given. But what happens is, in terms of when we see the microfinance sector, even right from the beginning, the social capital is one of the important sides when we see the development, involvement of women, the vulnerable segments of the society. You know, they need the support in terms of building capacity, building financial literacy, and building other ecosystem. That is how the microfinance sector has got its strength over a period of time. And sometime later, what has happened is when the organizations have grown big, though there are aspects of social impact, but it is little sidelined because we are a commercial organization. I think that we need to keep in mind that that social aspect also, as Carol was mentioning, that the NGOs are given the role of building the capacity of these women. I think all the microfinance institutions have tie-up with the social sector organizations like NGOs to build the capacity of their customers. Because in the life cycle of the customer, credit is one of the very many components of growth. If credit is given, it can only, maybe we may be getting the repayment, but ultimately whether the customer has grown or not, I think that depends on the other support systems, the social support system, the capacity building support system, and their ability to do the business and the ability to understand the credit side. In that way, I think that is also most important. In terms of the smaller organizations, as you mentioned, as FWWP has been supporting, because we believe that the organizations who are working at the grassroots, who are really impacting the customer and who have got a commitment for the women whom they are working with, no, they are the ones who have to be supported first, because they do not have, initially what happens is when we finance, there is no other lender. We only go there, try to understand them, what is their commitment, how they are doing the work, what is their reputation in the area, how they are connected to the, because when we go to the organizations, we try to see that our people will be there for 3-4 days, understand how they are connected to the customer, what sort of services they are giving, how they are able to communicate to the customer. That sort of, once we understand that yes, these are deep rooted here and they know how to do the business also. It's not that only they understand the social aspect, the developmental aspect, they need to know about the business also. If these two things are there, and from the governance angle, whether the people who are at the helm of the affairs are committed to this cause, whether they are here to do the business of supporting the women, doing that, focusing on their growth, no? These three aspects weigh greatly on our decision to support the smaller organizations. Say that if these are okay, we will start with them. What we do is we start with this very small amount initially, maybe the smaller organizations maybe about 20 lakhs, 25 lakhs, like that. And in terms of the credit also, apart from that, we build their capacity also. Institutional capacity is also built in terms of training, in terms of developing the governance system, in terms of technology development, in terms of the risk management also, how they should do. Because smaller organizations do not have expert people, do not have resources to spend, and do not have even we have customers in Manipur in different regions, maybe in the hilly regions and all those places, no, where they do not have any facility to see that. Even the internet facility would not have been there earlier, but all these facilities we need to see that these customers or these organizations are able to get and support them, see that yes, over a period of 2 to 3 years they are able to grow. That is how, when these customers we identify at this stage and support them, and we try to build the credit system. Once they are able to build the credit, their history, they can go to the mainstream lenders, to the other banks and other things. No, we have borrowed from FWD for the last 3 years. We have not defaulted anywhere, but we have supported these many thousands of women. And you can come and see our women, how they have developed in terms of their activities, in terms of their developing the market, and in terms of the economic empowerment also. That you can come and see. And when they go and see, then really they realize that yes, development has happened. In that way, they will also be convinced that we should give the credit. But having said that, these institutions, smaller institutions, as of now, definitely find it very difficult to grow in terms of, because one is their legal status is one of the things, because it is affecting. Because many of the smaller institutions are on the NGO side only, or the trust side. They have not become the NBFC MFIs, where even though those organizations who have become NBFC MFIs are converted as a regulated entity, no, but their capacity to mobilize capital has been very struggling for them. I think maybe because of the COVID, or even it has started from even the demonetization period itself. Demonetization, COVID, then other crises and all those things have made them to see that their growth is crippled. But ultimately, when we see these organizations, no, they are still survived. In spite of that, they have survived, try to see that their customers are met. Now that the next route is on the VC route is also coming, they are trying to see that they are tying up with some banks or the other NBFCs to see that the exposure is on the bank's books or the other NBFC books, but they are ultimately able to help their customers. I think in that way they have been trying to, but that is, organizations like SIDBI have recognized that fact, and definitely they are trying to give that capital, the subordinated capital to these organizations. I think that would definitely revive the fortune of these smaller MFIs. I would stop at that.
Thank you. No, I actually asked because I see in front of me Netfi Managing Director just come in. If it wouldn't have been for Netfi, you wouldn't have had, I'm talking about last 10 years back or 15 years back, these smaller guys who were there, and you wouldn't have the financial mechanism to identify them. But they had a mechanism because we have very strong social capital on which we have local groups. Marup is famous in Manipur, we have Honsois in Assam. So there are these mechanisms. Now, if one can tap in the mechanism, you have a basic, what you call the first level. I will not say that is enough. Like you correctly said, as you go forward, you have to get into all that. But the first level of work is someone recognizes and pushes them, which Netfi did, and therefore now a lot of these MFIs, including Northeast Small Finance Bank, has evolved from that, so that is something that we have to recognize for the Northeast, because like I said, there is a lot of scope for tapping on the social capital, which is very, very prominent here. So that's something which normal in our credit rating or in our rating tool, we do not really recognize that as much. So anyway, thank you very much. I would like to come to Sarat, who is an indigenous guy, who has also evolved from the same platform. And I think Sarat has been working in one corner of Assam for a fairly long time. Sarat, you have been there doing microfinance for almost 15 years, right? Oh, more than 15 years. And you've been dealing with these members. And we all know that if you need to actually take them forward to the next level, you need to see also some of them grow, individual members grow. How do you see this evolving in terms of micro enterprise SAG members or the JLG members moving into the next level of micro-enterprise development, etc. Do you see that happening, or do you just see that the same standard thing happening? If it is happening, have you done something on that lines, or anything that you can share?
Yeah, and good afternoon to everyone. And thank you for asking this question. This is actually after microfinance. So before going to that, actually, I would just like to make few points. Like, it has actually evolved, as you know, that we started from lending to SHGs, then slowly we moved to joint liability lending, then also we moved to beyond. We have also started individual lending, and you have rightly said that, the players like us, which are actually homegrown, and we have been working in this region for last 15 to 20 years, and it's because of NATFI's support that we have been able to continue our services to the people. And we have also reached different places, even some remote places also in the region. But as far as you are talking about these things, I actually that what CGMs are also was saying, rightly that some of the things I think we have to go to the basics. So we start from SHG lending, then we moved out, and we have been away from some of the basics. Once I can remember that I was speaking to Brisbane sir. Then I asked him, so why these MFIs are expected to do many things that banks are not expected? Because banks are expected to provide credit or savings or the services, but we as MFI were actually also expected to bring them up, developing their businesses, whole lot of things. Where we expected? He said that you sold yourself that way only. So yes, that is the reality, because we said that we will be doing this, we will be doing that, so we will be improving livelihood, we will be just take them to the micro-enterprise level and so on and so forth. So that is why actually we are also being funded. Bank has given loans under priority sector lending. So that way I think it's not only the lending. I think that is why I am talking about back to the basics, because we have to build the capacities also. Yes, government is there. Government has different missions. They have different projects. They are implementing, but I don't see that we are actually working in collaboration with some of these government programs, because it was also said in the morning that we have Assam State Rural Livelihood Missions. We have rural livelihood missions in all states. But although we have some collaborations at Sa-Dhan level or somewhere, but we as lenders, as retailers, actually we don't have less collaboration with these local level missions or local level projects. So I think there is an important role. We have to collaborate with them. We have to build the capacities, and I see that because we have already started giving loans. NATFI has, under the leadership of Murthy sir, they have started giving these micro-enterprise loans from 1 lakh to 2 lakh rupees, and we have given, I think, 1,300 accounts. We have already given loans to 1,300 people across 2-3 states. And fortunately, during this crisis period, we have given loans of around 5,000 people. We have 5,000 accounts. We have fresh disbursed, and there is no default. And that is what actually, many of you have also mentioned that it is actually recovering slowly, and we are seeing that there is improvement. Also, there are issues like non-payments from the people who have got NPA accounts. So that is there, but I think it's improving and it is recovering, and we hope that it will definitely we can take it to the next level. But at the same time, I would like to request also all the players that मैदान छोड़ के नहीं करना है, because I have seen that many of the institutions actually they have stopped lending, they are not being fresh disbursement. So as a result, it is also sending a bad message to the people that yes, these people are not going to fund. So we are not, again that cycle comes in. So that is why I think we should continue, and it will be a good time will come. But at the same time, we also, because we have self-regulations, we have code of conducts, but we also respect honestly all the code of conduct and this responsible lending. Otherwise, although Minister has said that government has enacted a bill to regulate the microfinance by the Assam government, it is already passed, it has become an act. So they are armed to it anyway. If tomorrow we do anything, so they may at any moment of time, just they need a circular or what they call a gazette notification that is elected from tomorrow or from today. So, but anyway, this micro enterprises, I think that is the ultimate goal of all microfinance institutions, that we are giving group loans, then slowly we are moving to individual lendings or micro enterprise lending, whether it is a group activity or individual activity. I think that is what we have to do, and for that, of course, we have to have the ecosystem, complete. It's not that only lending will lead to that. And one more point I'd like to just add here, that see, NEC, we all know, Northeast Council, and I'm not talking about their budget, I think it's 1,000 crore or something like that, but it does not matter what is their budget. But they are present, they work in the whole Northeast, and they work closely with the government. But I doubt that, they know much about what we are doing as a sector, as microfinance institutions. So we should actually take all those agencies in convergence, or at least we should make them aware that yes, this is what exactly we are doing. So we also need your support, because I think they are in a position to give us support, because we are, as MFI or as lenders, most of us actually present in some locations, like we are concentrated in Assam, Tripura and Manipur. But many of the states, many areas, we are not present. But I think NEC is an agency who can help us in reaching those places by giving development fund or any other kind of support. So I think that convergence also should be there. And yes, then finally, actually, I just also want to just mention, I think, whether this is right or wrong to say, I don't know, but I think this is coming to my mind, like, government of Assam, as promised, they have already completed the payments for this category 1 and category 2. But category 3 also, I think first chance, as Manu sir was saying, that they are going to pay very soon. But I think there is confusion also in the field that, irrespective of the criteria, whether they meet or not, people are still expecting that government is going to pay on behalf of us. So that is why many of these people are actually not paying. So that is why I think if this government scheme is closed as soon as possible, whether government pay or, whatever amount government pay, if they actually complete this scheme, I think then it will be clear, that clarity will come, and people we also can pursue them that yes, he could not qualify with the parameters that the government said. So now you have to pay either, or you have to continue as an NPA forever. So that way actually we can also pursue these people. So that way I think that is also important going forward. So I think I have actually included other points, not exactly what he was. Yeah, thank you so much.
Thank you. No, I agree to it. I think that is something, a very, very important point for all of us, I think, in so that, closing this as soon as possible, it is really hurting the sector, hurting the customers. I think we all acknowledge that. I agree to what Sarath has said. I come to Anjan. Northeast is a very diverse, extremely diverse. So having very standard, one size fit all. And I think that's one of the reasons why you see the outreach is limited only. Given the idea that, Asha has been working, of course, and you are actually working on this standard courses, what do you feel in terms of product innovation or process innovation that would, expand outreach? Your views?
Thank you, Sharma sir. Thank you, Gigi sir and Sa-Dhan team for organizing this wonderful event at an appropriate time. So, good afternoon, everybody. You just took out the quote from my mouth saying that it can't be a one-size-fits-all solution. Having worked in the Northeast and having stayed in the Northeast for around 4 to 5 years in the Sikkim Hills, what you mentioned is perfectly right. That for the Northeast, there has to be a completely different product. And it cannot, even in the Northeast, it cannot be a same product for each of the particular districts, states, or even region.
working for the microfinance, I mean, we are used to, like, I mean, people call it challenges, people call it issues, but I call it episode, like, I mean, we faced episodes right from the AP to demonetization and later the COVID. But Assam had, I mean, we don't say a single event, it had triple events. One was COVID, one was the loan relief, and the third was the floods that keep happening out here. So I mean, people should understand, I mean, everyone, all stakeholders should understand that it's okay to be not okay. Like, I mean, when there is a flood, you cannot expect that your NPAs are going to be great below 2%. We were seeing a presentation being made in which they said the NPA has to be below 5%. Then nobody is getting it. Like, I mean, the whole Assam state's portfolio, I mean, the Equifax report says is around 30%. And I mean, Indian gross NPA is 10% as per the Equifax report. Like, we can have all kinds of schemes. Government can have all kinds of facilities to be given to the microfinance industry. The banks can have all kinds of products for the microfinance institutions. But ultimately, who gets it? So that is very important. That, I mean, you have to place everything according to the region, district, and the situation that is happening at this particular time. Northeast is a place to be. We have seen, I mean, I have that, my company has the advantage. We have been here from 2008 as Arubhan or Bandhan. There were very less players out here at that particular time. The performance was brilliant, like much better than whole of India. I mean, I'll go back to even COVID. I mean, first let us take up the flood issue. I have seen areas which are flooded, the portfolio at risk goes up, within 3 months' time, it comes back to normal. We have gone through those stages. Demonetization, let me tell you, the performance of Assam and the Northeast region was brilliant. I'm including Tripura, I'm including Assam, I'm including Meghalaya. It was simply brilliant. While other areas were at a very high portfolio of risks, Reserve Bank was offering dispensation at that particular point of time, that no, you need not consider it as an NPA. But we were having a 99% recovery in Assam, for demonetization. So we should not forget the past when Assam was performing brilliant. As I mentioned, COVID, floods, and the issue at hand is a temporary event. We should be okay to deal with it, make provisions, get out of it, move out, and look forward. And that's what we're doing. Like, I mean, now we have decided that we're going to expand, again, get back to the normal, keeping this aside. I would give government full credit. The scheme that they gave, as Manoj sir mentioned, was they took into account even good people who are paying back well. They have taken them also into account, and move out of it. But what are the concerns? People need money. We are willing to give them. But what are the concerns? Number one is, if you're going to have a 30% portfolio at risk or NPAs, are we pushing them towards financial exclusion? Is the strategy right? There are certain banks who have said, once an NPA, never a loan. Is the strategy right? I mean, if the clients come back, repay it, can we not give them further loan? I mean, it was an event which was beyond their control also. So we have to be with them. So these are areas which need to be looked into, that this excluding 30% of the population from financial inclusion is going to be a serious effect on the economy, on the state, on everybody. For microfinance companies, it is okay, they will make provisions and get out of it. But the focus that is there, that we will actually deal with the underprivileged, financial excluded, that gets deviated. We are digressing from our mission. So it is important that, number one, they get back to normal. We start funding them. The banks also realize, our funding agencies also realize that from the smallest of the NGOs to the largest of institutions, there can't be a same criteria for lending. They give them funds. And if you take a statistic, sir, Like how many of the MFIs have defaulted? I mean, the percentage will be very less. So what are the banks worried about? Why should they be worried that they will default? So they should come and give them. There are various schemes, co-lending models. Today the presentation that I saw, co-lending models and the VC model, they are asking for A+ grading, rating. I can recollect when we were doing very well, having least of portfolio at risk, we were at BBB+. So when I went to the rating agency and I said that you're giving me BBB with plus, but I meet all the criteria of A+. They said, no, we can't give it to you. I said, why? They said, no, your portfolio is at around 1,400 crores. We'll give that to only 2,500 crores. I said, but that's a ridiculous criteria. It's just like saying that if you're short, you can't come first in class. So that's how it is. So these are things that need to be attended. And then, the regulations also. Now we've got a wonderful regulation from Reserve Bank of India. The previous challenges, the previous restrictions, they're all gone. So the products can be designed the way we want to design, but that also calls for greater responsibility on our part. All these episodes that happen is not because of everyone's making. It could be someone, when you're driving on a road, it's not enough that you drive carefully. Your neighbor driver also has to be careful so that you don't meet an accident. Sometimes you come to a situation where a neighboring driver is not competent. He comes and crashes and the whole industry faces the issue. That also needs to be attended to. These are my initial thoughts. You can go on and on speaking, but you can come back later on.
Hello. Thank you very much. I think the last point that you stated about the competing driver also being this one, and I think that's what I was talking about, some sort of a self-regulation that we need to build up onto. And the other point that you mentioned about the criteria, that's what I was hinting in the rating tools that we are talking about, and I think yes, we need to relook at that. We are coming to a short, actually, there are many more questions, but I would now just, because of the lack of time, just give 2 minutes to each of you to sort of wrap up, because we are almost near 1:30 and they've asked me to close by 1:30. So just 2 minutes time on your thoughts of just simple question of how do you feel of, or how do you plan to do this financial inclusion in the next 2 years. So I will begin with FWWP, and then I think we take this line. So how do you plan financial inclusion? I'm saying financial inclusion because I'm taking microfinance, and you could use other mechanisms also in the plate now that we have, including digitization, whatever. So what is your, for better financial inclusion, what are your thoughts in the Northeast?
I think it's a very good platform for FWWP. Because we are in the space of total overall financial inclusion. It is not only the finance. We give the capacity building services, we source money from the donors like the CSR donors, FCRA donors, and try to build the capacity of the women. We target only the microfinance customers to build their capacity. We are working with about 5 to 6 institutions who are in Manipur and also in West Bengal, wherein we closely engage with these women for, say, 1 year, 1.5 years, in order to make them understand about the financial capabilities of taking the loan, how to repay the loan, how to build the culture, then also business. What is that they have to do in business? If they are doing some business, what is that business nuances they have to learn? Then how they can get the market linkages. That is also one of the very important components what we have seen. Now of late the digital aspect also is one of the that digital technology, digital inclusion and digital literacy also is one of the very important areas for us. Then ultimately the credit linkage. Credit linkage, because we cannot serve all the customers. We have a limited capacity. What we try to do is we try to bring the ecosystem players like fintechs or microfinance institutions or banks to see that I have developed the capacity of these women. Why not you fund them? because they are now ready to take the credit. They are not new to credit type of customers, they are ready to take the type of customer. Therefore, now we have tied up with some sort of fintechs wherein they can examine this creditability of these customers and try to lend them. That is where we are trying to see that these customers are able to get the credit. Simultaneously, they develop their capacity to become a successful and sustainable entrepreneur. That is how we are there, and we continue to build that. And second thing, what we have seen is the building the resilience of the organizations. The smaller organizations need to know, and they have been. What we have seen is the connect with the customers brings the resilience in the institution. I think we need to promote that with the other organizations also, have better connect with the customers, try to see that what is the overall requirement, whether we can support those things. In that way, the resilience building is also very important. Then the governance of the organization itself, because what we have seen is some of the organizations in terms of growing or maybe some bad practices have creeped in and the entire industry has to take the blame for that. I think that sort of greed has to be stopped, and it has to come from the individual or the institutional aspect. That has to, I think that culture has to be brought. And one thing what Assam government has done now, in that when Manoj was explaining that, I think they have given a lesson to the customers, taking the high priority of the prompt repairs. They have given them first. Second one were little default. I think if you are doing well, we will support you first. I think that should be the principle, and that should, even the customers also should. In that way, FWD would try to build this ecosystem very strongly, connecting with all the eco players, and also bring outside funds to see that the women who are connected with the microfinance sector are developed individually.
Thank you. I think ask Manoj Nambiar, who has been involved. So how do you see
So I think I'll start by saying that the reason why we are here trying to attempt to reset to the sector is because we've forgotten the fundamentals. The first principles on which the microfinance business essentially was started has been completely forgotten. So, somebody spoke about sort of responsible finance. A lot of people spoke about capacity building. We've tried to convert a social business into a purely commercial business. And that is the reason why we are here trying to research. Right? Rather than trying to understand that this particular segment that we are trying to address is very socially vulnerable, mostly illiterate, very, very impressionable, right? So the responsibility is on us as to how much of credit to give. You asked a very good question, Aman, on the credit side. You would be surprised to know that it is after the issue that in Assam, which happened, that the RBI has now come out with credit guidelines only for the sector. So whether it is banks or non-banks, all of us have to adhere to household income assessment and not leverage the family more than 50%. Right? So this is unheard of. RBI normally doesn't dictate credit terms on what they should do on asset classes to the regulated entity. So I would say, sir, really getting back to the first principles in terms of understanding the need of the customer, not talking only about microfinance but financial inclusion. So there are a lot of other requirements that she has, bank accounts, insurance, pensions, investments, so that she doesn't want to put money into those kind of chit funds or places where the money doesn't come back. I think somebody made a very good point on the hilly terrain and the technology. Today, a lot of us essentially are ensuring that through digital technology, through fintech, through apps, we are able to access a customer even if she is not able to come, right? And ensure that the whole process is seamless by cashless repayment. So only once we meet the customer, if she is good enough from a credit bureau record, we are able to give her a loan in just about 10 minutes flat, and the entire repayment comes through to a cashless mode. So she focuses on our business, we focus on ours. As long as she doesn't disturb us, we don't disturb her. She misses a payment, she gets a call. She misses two payments, somebody goes to visit her. That is how efficiency would essentially, come back. And I would again underline the aspect of capacity building, both on clients as well as employees. All of us sitting here essentially are employees, and we play a key role in ensuring that the connect between the institution and the customer essentially happens. So I would really sort of say hats off to the employees also who've gone through a very difficult period in the last 2-3 years. They have stuck on, and as sort of Sarat said, they've not run away from the field. I would certainly like to know from Arjun who's that rough rally driver who essentially hurt all of us.
Yeah, so it's better not to name any rough driver.
Things are better not said.
Yeah, he'll learn his lessons from that. He will learn his lessons from the accidents that he keeps doing. So that is how it is. No, I agree. Financial inclusion is the most important motive. But we at ASHA, we believe, I often say, in India, the promotion line is considered an NGO, then NBFC, MFI, and then a bank. So everybody's aim is from NGO, I'll convert to MFI, and then I will go into a bank. But if you go to the birthplace of microfinance, Bangladesh, that is not so. The largest MFI in Bangladesh in terms of microfinance portfolio is NGO, which is ASHA. So that's what, even if we are wearing a business suit, we should have the Jola bag inside, as I say, So that should be the mentality of doing microfinance. I agree that other initiatives should be built in according to this. Sa-Dhan is doing a wonderful job, tying up with Reserve Bank of India and various other entities for doing the added microfinance activities, whether it is in the role of financial literacy. Just today I was reading Gigi sir's message that they have conducted around 1,023 financial literacy program, and each program I know because I am a part of the program. There are around 60 to 70 ladies attending, which is brilliant. So you multiply 1,023 into 70. That is the number of clients that they have covered in financial literacy. And then I have got the feedback from my field, where they have told me that the women actually participate, they actively participate, they talk, they ask explanation, so that is a level, that is one side. There are other issues. We are doing skill development programs from SIDBI in West Bengal. We have AMFI West Bengal, which is doing skill development. In fact, they have developed a software too, where they will be developing a marketplace for these skill developed entities, which is being financed by SIDBI jointly with AMFI. Assam, take the case of Assam. Those who are here, like every year there is a disaster, there is a flood. Our boys who are doing a wonderful job, they are distributing relief materials at the field. That builds up the customer connect actually. They see that during disasters, these people are there with us. So these are important. Health, whether being health camps are held. We have health camps everywhere. And our people are volunteering for organizing this health camp. They are seeing. We have seen that in areas where some of the MFIs cannot enter when various issues episodes crop up, our people can safely enter because they're innocent people. They know who is helping them out and how they are helping it out. So it is not enough that we only finance them. We include huge levels of programs and which we are capable of doing, and ultimately we will not be seen as a lender, we will be seen as a friend who is always available. So that is the way we should move.
Thank you. Thank you, Mr. And then I will now ask the same question to Carol.
So I'll just take a step back and related to the speech that context-setting speech that Mr. Memon had said this morning, that the new loans are doing well and recoveries are taking place. Customers have demonstrated an intention to repay. So this is not just what we have seen in this crisis, but time and again, ever since most of us came into existence just prior to the Andhra crisis. We have seen that the customers have demonstrated time and again to repay the loans and continue their relationship with us. The bottom of the pyramid where we serve is a highly resilient customer segment. And it is time for us now to, again, one size does not fit all. We have to ensure that our products and services are designed according to the needs and requirements of our customers. And that is what we have strived to do in Ujjivan from day one, where our customers are given a journey, and that journey starts from the group lending, moving to individual lending, moving to micro mortgages. Then they have the choice to take on a housing, micro enterprise, small and medium enterprise loans. So this is the kind of products and services that we have put together for our customer base to take them through the journey, and we being a partner in their development cycle. And along with that now, with the digital taking a lot of momentum and self-assisted, the assisted technology that has come into existence, we are using all this to give the customers a choice and the customers the freedom to go about doing their business. But at the same time, if they need any financial assistance from us, they could take it. It's a long time since I'm sure most of us have gone to the bank branches and done transactions there. Why should this segment of customers come and sit in our branches for long periods of time? And it's like, most of us take the attitude of doing our customers a favor. It is not. They are doing us a favor by obtaining our products and services. And why should they come to our branches? They can use the digital means to take on the products and services that they richly deserve. And this is how we would like to see financial inclusion moving forward. And we would like to be part of this economy and be a part of, in 2025-26, India's goal is also to become a $5 trillion economy, and we would like to participate in that. Thank you.
Let me cut it short. I'll save at least 1 minute for you. Just one point. In addition to whatever all the speakers have said on financial inclusion, see, bankers should be given this message, or they should be convinced that the institutions, especially the microfinance institutions as on today, they are much more strong in terms of systems and processes than pre-COVID. Because a lot of changes have been made, whether in terms of use of technology or improvement in systems and processes. So please have confidence, give money, then only financial inclusion will happen. Thank you.
I think with this, I think we are almost, in fact, past over the time. So I'll just take a minute to wrap up. And I think we have actually have like I said, all the people with a whole lot of experience in microfinance. Actually, if we could get out more from them, it would have been wonderful. But nonetheless, a few points. I think Northeast being the place where it is being, the idea of actually expanding outreach is challenging, but people have been working on it. One of the elements which the speakers have come out very strongly is that I think particularly for Northeast, it still remains very strong as commercial, yes, but it should be seen as a social business. So, what we call as resetting it. Look at social business. When we are saying that looking at social business, we also need to look at how do we build up linkages right up to the grassroots, and that's where product innovation, what Carol was saying, comes in. And I hope NEC and other institutions, which Sarat said, is around, because there is a need for a whole lot of product innovation, process innovation, for linking with what I call as tapping the social capital, which we are not currently doing outside all the financial inclusion and microfinance initiative currently. And like she correctly said, that's the reason why we're also not aware, because they don't come under any credit bureau at all. So they're totally outside the credit bureau also. But that linkages, I think, could be there possible, and I think that's how we could actually expand outreach substantially. The other element which FWWB, Mr. Bhatt was saying, was capacity building. I think at all levels, at different I think is definitely another key part. And what Anjan Das Gupta also mentioned was good capacity building, and also an element of looking at, he also said about process innovation and product differentiation. There is also one element which I think all of them, as by and large, touched upon, was the new thing called digitization. I think that is something we have to keep in mind, because outside the microfinance sector, there are these, and I know because I am from the banking sector, fintechs we are moving in. Outside the independent fintechs which have moved in for credit, so they are also moving in. So how do we link up all of these and ensure that there is a seamless sort of integration? I think that would ensure that the entire process is done. So thank you very much. Thanks to Sa-Dhan for actually bringing all of us here. COVID had actually put a stop to that. It is very important to have this discussion and conversation going. So thanks to Sa-Dhan and Gigi Mammon for having us. Thank you very much.
We have big hand to the entire panel. It was an excellent delivery.
Thank you.
So now I would request Gigi sir to kindly give away the special gift that we have from our side to our moderator, as well as all the discussants over here. So now we would like to get started with our next thematic session, and the session is on meeting the funding needs of microfinance institutions in Northeast region. And I would request our moderator, Mr. R.K. Thakkar, ex-CMD of UCO Bank, to kindly come to the dais. Also, I would request our discussants, Mr. S.P. Singh, CGM, SIDBI, SIDBI, Mr. PVSLN Murthy, CMD NETFI, Mr. Samir Kumar Kartikcha, DGM SME SBI, and Mr. Mathunath Sharma, MD Nightingale Finvest Private Limited. And I request Gigi sir to kindly felicitate our moderator as well as all the discussants of our next thematic session.
I hope there's no plans for the merger.
But in fact, we are simply to the Northeast.
Good afternoon, everybody. I think we are a bit late, so I will be brief before we start. I welcome my fellow panelists. All are, I think, very illustrious people in their respective fields, and it would be really nice to have their views so that we can arrive at some type of what I would call as future plans. What is the fact? Are the facts? I think in the previous panel discussion also, the facts have been brought out, and what is the way forward, I think, is more important. And especially the financing part, obviously, in any case, is always the topmost priority. And we have my friends from the financial sector there, and with the FX level institutions being there, SIDBI and NetFee. So to start with, I would request Mr. Murthy, because he represents the FX level financial institution, especially for development of the northeastern states. So I would request him to first tell us what are the steps they intend to take in the given scenario, especially with the situation prevalent in the northeastern with the NPAs and disbursement being not up to that level which should happen, especially after the COVID and the Assam crisis. I think I would request him to please go ahead.
Good afternoon, friends. The very important topic, funding to the MFIs, very important. And as in the previous session, repeatedly one or two speakers was telling about Northeast is a different cup of tea. Definitely we have to look at it differently. Different kinds of problems. But one good thing is we don't need huge money. We don't need huge money. If you see the last year as 22 September that figures, if you see the entire country, there's 2,72,000 some 742 crores was the MF lending. But whereas Northeast outstanding is only 15,000 crores. It's around 6.7%. And unfortunately, because of various problems that have cropped up, whether it is man-made or it is natural. So man-made we can do, natural also we can do. It has come down to now only around 9,000 against 3,50,000 crores of the country. We are at only 9,000. It is around 2.7%, something like that. And the process, as you all appreciate, Assam is the major contributor either ways. So, if the Assam business has come down, the overall business will come down. If the Assam business goes up, the overall business will go up. Because other 7 states are relatively smaller and yet to penetrate. Many, mostly 95%, including the people sitting on my side, they don't penetrate into those areas. They will do business in Assam. So that is another problem. So in the process, what happened? The lending from the banks has also come down drastically. But naturally, because at that particular point of time, the NPAs were very high. It's a human tendency. If somebody wants to repay my loan, why should I repay my loan? So people have not repaid. But later, I think by and large, they realized. And now, as far as my MFIs are concerned, I am seeing coffee improvement is there, right from 75% to even 90%. So, this issue is now funding options. Before telling anybody, I came out with one or two plans, and I have impressed upon Government of India the need to look at this, because I am the one person, 100% I believe that MF is the backbone of this country. There is no doubt about it. But how to get the funding? So first what I implemented, just I will take 2 minutes, and then what we did was, I have to supply lesser cost funds, because so many policies have come, RBI is bringing with some policies, state governments are coming with policies, it's okay. But the crux of the issue is that I should get funds at a reasonable cost, and I should have a markup of reasonable markup to take care of my expenses, and then give the lending at a reasonable price. So who will do this? So we started 2 ways. One is, I started giving at 7% interest to my MFIs and asking them to go to remote areas. This is the district you have to cover. This is the finance, 7%. This is one we have successfully implemented last year. More than 30-40 crores we have given, right? And this year already we have given around 30-40 crores. The more is because why 30-40 crores means the places where I am asking them to go are very remote, and jada money is not necessary. Number of people will be covered more. So we are doing it. I explained this to Honorable Chief Minister of Assam also. He was very much impressed. Second scheme which I did, more or less like a co-lending. More or less like a co-lending. So as previous speakers were telling, co-lending is also a good opportunity. But there the issue is technology. So unless the MFI and the bank should have the technology and interface, etc., then only they will be able to do the co-lending. But I started co-lending, I started supplying money, and I started giving 7%, 8%. So 7 or 8% I am sharing with the MFI for all this thing doing it. So this is one scheme which I thought that first we should start. So we did it. Around 5,000, 6,000 beneficiaries have taken it. Very good recovery is there. And so this has to be. So I explained this to the government of Assam, because he only launched the scheme. So they agreed that they wanted to give us some money. That's all separate issue. So second thing is that I convinced State Bank CGM. So you don't throw your money, but go by case to by. MFI based on case to case. Each MFI. Yes, this MFI is doing good. Take the financials, etc., and give them at 7% interest. Because why I am insisting on it, in Northeast especially, if you have to go to the difficult areas, the cost is very high. But my another request to the MFI community here is, you also please be reasonable to certain period, maybe 3 years to 4 years down the line. Be reasonable. Once the economies of the people, once the earnings of the people goes up, then they will be able to serve them more. Otherwise, they will get into the debt trap. So, from both the sides, this should be there. Tomorrow, there should not be an issue situation which should not arise, which is it. Third thing which I have suggested is RIDF. So, CB is there. So, please say, see, RIDF is there. Wherever there is a gap of what is called priority lending, you have to deposit that money in NABARD at a particular price. Okay. So in Northeast also, wherever the CD ratio or whatever it is less, to that extent, ask them create an RIDF fund type, MF fund. From that fund, lend it to these people. Make somebody responsible, like NABARD is responsible for RIDF, make SIDBI responsible for this. This is one idea I have given. Third idea which I have given, I requested Government of India, I initiated a conversation, but my request to SIDBI also, think seriously, because unless government support is there, or some public sector undertakings are there, or some thing there, affordable finance mobilization is difficult. So, create a corporation with a fund, good fund. A lot of funds have been created now. There is a mother fund, they have created 10,000 crores for investing it into the startups. So similar way, create an organization which exclusively invest and lend to the MFIs by the government, mostly Government of India. Or you make this mother funds, there is a scheme of mother funds and daughter funds, I think you are aware. Similar way you create it for the, because this is also like a startup. They need capital. Say, I do capital investment in my MFI, I do finance to my MFI. Similar way, this organization, Apex organization, should bring the money from the Government of India and see that the MF ecosystem is nurtured. If these things are done, maybe short run, 5 to 6 years, you will definitely, it's going to be a game changer. But caveat is, MFIs should be transparent and reasonably charged. This is very important. Charge is the issue. Of course, within the RBI guidelines. So when the RBI guidelines come into picture, when the cost of funds has come down, then naturally the interest rate also may come down. These are the few initial thoughts. As we go along, we will discuss. There is not much time also. Thank you.
Thank you, Mr. Murthy. I think whatever you are proposing, obviously it would help the MFIs. And whatever situation is created now, the disbursement not happening or not being up to the desired level, I think that should give a push to that. Similarly, I think you have suggested a few things to SIDBI also. They should also go ahead. SIDBI is again an apex level institution doing financing, giving capacity development. They have a fund who are investing in the equity or quasi-equity of the MFIs. So I think SIDBI has a big role to play in further giving a push to the funding in the Northeast states. So I would request Mr. Singh to let us know what steps are being proposed from SIDBI and what are the other schemes which they are offering to MFIs.
Thank you, Mr. Thank you, Mr. I think no problem. So, Mr. Murthy was referring to this Government of India fund, and all you will be happy to know that this scheme of India Microfinance Equity Fund was launched way back in 2013. 800 crore was given, and only 100 crore has been deployed till date. I mean, you see, why? Yeah, it is okay. Just one. Yeah. So only 100 crore could be deployed, and we surprised to know that there is a 30 to 40% default. And most important factor is today, in fact, money is not a problem. If you ask me as a banker, you see the biggest problem is in this system. I am managing the 15,000 crore sovereign fund for the startups and 300 crore fund for the microfinance sector. And if you ask my experience, where there is the biggest problem is the governance at the institutional level. Majority of the defaults which has taken place is not business default. That again you will be surprised to note. And these are driven defaults, where either money has been siphoned or the entire MIS has been faked. Right? These are the issues which we must understand and develop. And the role which I expect from the microfinance institutions is not to educate yourself, but also teach the character building into your borrowers as well. I think country as a whole, we need this kind of situation. In a startup ecosystem, I am seeing, you must be seeing the, I mean certain things I'm forced to discuss with you. Just you see, somebody was referring that the now state government of Assam has brought a new regulation for the MFIs in the state. There was a high-level meeting where Honorable Chief Minister himself was there, and I would like to quote exactly what he said. But the impression in the government was that exorbitant interest rates are being charged by few MFIs from the customers. Ultimately, please try to understand that it is a democracy and a welfare state. Ultimately, everybody is having interest in the ultimate person, the consumer. So the reason is that any regulation which it comes, similar happenings are happening into the startup ecosystem, and the now regulators are looking forward for new regulation. It is you who is inviting the regulators and the government to come with more harsh regulations and the rules, and thereafter you are crying. I'm very blunt in talking to you. The reason is simple. Sitting here, I'm offering each one of you. I have given this task to Mr. Manoj that you bring 20 MFIs to me, and I'll be supporting by way of equity to all of them. But are you ready? The moment we talk about reveal this, express this, bring out clearly in your balance sheet these things, adopt the digital transaction, don't go for cash, you run it. What is the reason? So my question is that basically all we have been talking about creating more institutions, creating more funds, whether anybody is talking revitalizing the institutions. That is the need of the hour. So creating more institutions, creating more funds is not going to solve the problem. Government has given this perpetual fund. Please try to understand, if this 300 crore would have been deployed in past 10 years, and this 300 crore would have been multiplied to 1,000 crore, this money would have been for you only. This money is for you, right? So, if you ask me, there's no dearth of money for good people. And you trust it, that the capital changes the better. If you see the whole world I am talking about, all this money and all, everybody will be talking. You see three kinds of system prevailed in the world: socialist, mixed, and the capitalist. And what survived and thrived is capitalist. All the socialist bloc from the world has gone out, and the mixed have always a mixed experience. So ultimately, who is going to survive? Now the second aspect which I would like to come, it's not that I'm not supporting the weak. The best important thing is that microfinance institutions. Another important aspect I would like to add is, with my experience which I am doing, is that each and every single entity which is supported should also be motivated to move out of livelihood to enterprise. The simple reason is that unless otherwise a person is moving out of livelihood to enterprise, he cannot create wealth. And you try to understand, income can never bring equality. It is the wealth which brings equality. So what happens? For that, there is a need for a sustained microfinance program. In what way? Now, just a couple of points from SIDBI side. As far as the accessibility to capital is concerned, I am inviting each and every single MFI who is sitting here, coming to the criteria as a tier 2 and tier 3 MFI,
If you are interested, please do apply. I am ready to support you in whatever way I can support by way of India Microfinance Equity Fund. Two things very important. If you are a non-NBFC MFI, if you are a society and a Section 25 company, we shall be supporting by way of subordinated debt at 8% for a period of almost 8 years with a moratorium of 4 to 5 years. You cannot get a better capital than this. Please do come forward. All those NBFC MFIs, those who are having problem of dilution, those who are having problem of valuations, those who are having any other problem, please come forward. I'll give you non-convertible preference shares at a rate of 9% only. Please come forward. No dilution, no valuation, no loss. Just have this in your mind that this money belongs to you. If you are returning it back to me, it will again go back to you. Right? Now the second aspect, as far as the lending is concerned, we are the single largest lender to the MFI sector, and we take this pride that we have supported this sector. We have traveled along with you, side by side, in whatever way, by all means, through grant, through loan, and that journey is continuing. And the third intervention which SIDBI has undertaken, we are looking forward converting livelihood ventures to enterprises, right? And we have launched a Prayas scheme. All you will be happy to note that 1,500 crore we have deployed from our own sources, and the average lending rate to the ultimate borrower is 15 to 16% and sometimes even 14 to 15%. The reason is simple, just to try to understand what kind of demonstration effect creates one successful venture. If you have financed, say, 50,000 livelihood ventures, at least 2, 3, 4 years, 5 years down the line, you can find out that this 100 companies or this 10 companies now can be taken to the next level because they have created their customer base, they have created their own brand, they have created their own acceptability in the market. Come forward, we are supporting up to 5 lakh rupees to these ventures. Maybe out of these 10, 150 which you are selecting out of 50,000, they may be some corporates of tomorrow, right? So come forward. As far as the financing options are concerned, I don't see any problem. As far as my experience goes and the work which I am doing, trust, Gigi is here. I met him personally and I asked Gigi, please create this awareness. Whichever tier 2, tier 3 MFIs are facing equity problem, come to me, I am there to support you. And trust it, I'll be giving you guidance, how can you make yourself better, right? And this is in your own good. Once again you see that you are not only serving the society, but this is in your own good. So be better, right? We are working with MPIN and reaching out. This year, current financial, we have already supported 10, 12 MFIs, those who are very small MFIs. We are finding unreasonable reasons, not even after sanctioning available. The simple reason is that they are having the fear कि आप कल आकर के कहीं आप हमारे बोर्ड पे तो नहीं बैठ जाओगे. अरे भाई अगर हम आपके बोर्ड पे आ जाएंगे तो प्रॉब्लम आपको क्या है? If you are really, अगर आप खुद को अच्छा बनाना चाहते हैं, तो अगर मान लीजिए हम आपके घर में आकर बैठते हैं, क्या प्रॉब्लम है भाई? Ultimately, I am not taking anything. So let us change our approach. Time and again I will say it is not from the lender's perspective which I am submitting to you. It is an ordinary citizen perspective towards you. Take it. Thank you.
Thank you, Mr. Singh. I think you have raised quite a few questions for the MFI sitting here. And I think what he has rightly pointed out, the equity of 300 crore fund which they had raised long time back is only utilized to the extent of 100 crores. So I think big gap is there and you should be able to utilize it. Another thing, I think important thing was the upgrading to the enterprise level. A few of our borrowers whom we can raise so that tomorrow they can be a good industrialist or a good corporate who can do well for the country. And another concern what Mr. Singh has raised is regarding the exorbitant rates being charged by a few MFIs. It may not be all of you, but I think a few, I think that is a question perhaps when we go to the field which we have to face. So in that context I would like to, Mr. Sharma to respond and what are his views in this matter. I think we would like to know that.
Namaskar. And good afternoon all. At first I present to thanks to Sa-Dhan for giving this opportunity to present here. And I present to thanks to Netfi for their continuous support to Northeast based MFI for last 20 years around. From 2004 we are in this sector. Last 20 years we got continuous support from Netfi on good days and bad days. If you see in before COVID, we are cross 100 crores portfolio, 100% collection efficiency. During the COVID, we are also affected, decline our some portfolio also. Government of India also supported to the MFI sector. They also announced some schemes. But Northeast based MFI we are not able to get that fund. First two stands were not able to get any fund from Northeast based MFI, like Nightingales and others also. But one scheme last year 7,500 crores for under CGT's credit guarantee scheme. Under that scheme, we received from Northeast based MFI only I think 24 crores. Out of 7,500 crores, Northeast based MFI received only 24 crores rupees. We have processed so many banks that times because 75% guaranteed by the government of India. That purpose also, that times also no banks provided their support to us. I hope so many banks in Guwahati and Assam also, but they are not because they are looks only for the size. Because all are the Northeast based MFI, our size is below 100 crores, but below 100 crores and ratings level also normally our double B plus, B as like, so that causes they were not to select the funding to this MFI. One bank gave us the 10 crores rupees, they also such 75% guaranteed by the government of India. They again took 10% from us. To 85% guarantee provided them for that fund. So basically we are very less supported from the banks, but one thing is there, now we got support from SBI, UCO, Canara also, some other banks also now we get support, but some banks still now looks about a BBB rating. If we talk to the ratings purpose for the rating agencies, then they told us that below 100 crore size is not for eligible for BBB ratings, but we go to banks approaching the fund, then bank told us that you bring the BBB, then we will be able to provide the fund to you. So this is normally Northeast based MFI, all are below 100 crore size, small size organization, and we face this type of issue for raised fund from banks. From last around after COVID, we faced more problems after COVID. Before COVID, definitely we have more funds with more lenders with us, so we don't face that such of problems. If we see in our collection efficiency, Northeast region presently everyone actually fear about this, that after COVID so many issues is here, but we have presently two BC, one is one net fee, around my clients around 1,500 borrowers, last 2 years with them, loan size 1 lakh to 2 lakhs, 100% recovery. On most of the around 70% is the digitization mode. 70% is digitization mode collections, and have around 1,500 last 2 years we disbursed around 15 crore rupees, 100% recovery. Another one BC with us around 10,000 borrowers with me last 2 years, 100% recovery. So collection, yeah, my thought is here that if we select our borrowers, we appraise that our borrowers is properly done in microfinance, then definitely my portfolio will be good. So Assam and Northeast, we work presently in Assam, Meghalaya, Mizoram and Arunachal Pradesh. These four states. Arunachal basically the hilly states where population density is less, but we try to open more branches in that places. and Mizoram also likely, and Meghalaya. So all these states collection efficiency is now present 100%, all the states, and we hope that in terms of financial inclusion to all these places is very here. Scope is here in future days. We also expand our activities in these areas, and we also hope to more support from the banks for this sector. Again, my request to SIDBI also. SIDBI here is here. We got a fund from 1.5 crore sanction from SIDBI in last March for equity purpose. 1 crore already released, 50% released. I hope another more fund will be approached to SIDBI. And my request is to SIDBI also to provide more fund to this sector, this MFI of these sectors, that they can base their capital from raise their capital, and then I hope then banks also come forward their support to them. So if you see the Northeast-based MFI, last 20 years we are here, we working here. People is very good. Most of the people are normally engaged in their activities, small trades, etc. So opportunity is very high in the Northeast regions. Again, I want to speak here that before COVID, the hair portfolio was around 12,500 crores, but now is 7,000 crore portfolios here. Borrower also up to from 26 lakhs to decline to 16 lakhs. So presently negative growth is here in Assam, but I hope hope is here. Again, my thought is that to again 1 year again will restore these sectors. Sometimes you see in the JLG models, actually microfinance sector is very good for cost effective, but due to this COVID effect and others, we also disperse some individuals. But my thing is to again we restore the JLG models, 3, 4, 5 to 4 to 10 members, and it is cost effective for us, and also for joint liabilities is there. So I hope very shortly we will be restored joint liabilities group again, and 1 year I hope everything will be normal. Thank you, sir.
Thank you, Mr. Salman. I think he has raised 1 or 2 issues. I think mostly concern the banks also. From my again, I will be referring to my fellow banker today. One thing he has raised, and that was also in the presentation when your GM from State Bank of India had come. We have a minimum credit rating for co-lending or for financing of the MFIs, which is I think is A+. What Mr. Sharma also raised is they are most of the MFIs, they are rated BBB or BBB+. So they don't become eligible for this bank finance. Although later on he has said that a few banks like SBI, UCO and Canara have been now funding them. Yeah. So is that a credit rating as a strain for the banks to finance the MFIs, or what the banks are proposing so that we can have adequate funding for the MFIs? I'd like to have Mr. Jaz's response.
Yes, there is a credit rating kind of guidelines there, but of course ultimately everything boils down to one fact. The MFI to which we are lending, whether they are, as Singh Sir was rightly telling, capable enough of handling this kind of fund, whether they are there to take it to the last mile, which is the ultimate purpose of each bank, I believe, here. And that, I believe, that kind of consciousness would come from the MFI side also. One word which I would like, this is my favorite word I like to repeat everywhere. Each MFI must try to be smart. Smart in the sense that you should be smart enough to withstand the challenges that today's economy will throw at you. You should be smart enough to withstand the competition you will like to face if you want to grow. If you want to grow, you will have to face the competition. And you don't know how much smart your competitor is. That thing, we from SBI at least, we find is lacking in knowledge. As Sir was rightly said, lack of fund is not at all an issue. In fact, from our head office, from our corporate center also, there is constant thrust to capture more and more share of MFI. But ultimately, all banks, including SBI of course, we deal in public money. And public money means your money going to you back. Right? So if we are not confident enough that the money we are giving to you will come back to us in time, as per the laid down guidelines, as per the laid down instructions, then any bank will hesitate to give any kind of support. In that context, again I will repeat, you have to be smart enough, you have to be eligible enough, so that why should you run after the bank? The bank should run after you. Please try to understand one thing. If a borrower is looking for a good bank, banks are also looking for good borrowers. Right? If you ask me, in India at least, more than 60% of the borrowers, when they come to us for loan, they believe repaying is the last option. Repayment is the last option. It may be very harsh to listen to, but it is fact. But again, coming to MFI, our experience has been better as compared to other sectional borrowers. Our branch managers, our field officers, those who are working in the field, they have many success stories to tell us. And going forward, I believe if the MFIs are strong enough, if the MFIs are competent enough, if the MFIs are street smart or smart enough, there will be no dearth of run from any bank, and mostly not at all from SBI at least. We are here to support you. Of course, the future is for them. Future belongs to MFI, because ultimately the goal of reaching out to the last mile population, we cannot fulfill it unless there is a kind of a co-partnership between the banks, the funding institutions and the MFIs. Because as banks, we have certain challenges which we can hope to bridge by financing to the MFIs. That should be the ultimate goal, I believe, for you also. But as Singh was rightly telling, don't be afraid if we ask for something. You have to be digitally savvy, you have to be financially disciplined, you have to be repayment savvy also. Make yourself attractive enough so that banks should run after you. Why should you run after you? That's all I have.
Just you see, how the sector has grown. 3,20,000 crore we are sitting. 99-2000 when SETB had launched the National Microfinance Program in association with BFID, trust me, people were not ready to accept a grant to convert from NGO to MFI. I am part and parcel of the entire journey. I have seen, we were calling people that I am giving you this 2 lakh rupees, 5 lakh rupees, you to convert into NBFC MFI, bring some corporate governance, buy some computer in your office. People were not ready. And today even you will be surprised, there is less time, I would like to share some of the experiences which is revealing for all of you. One MFI I sanctioned 1 crore rupees under IMEF just 2 months back. And believe it, 90% collection is cash. I told, why are you not going for digital collection? And I am giving you grant to purchase computer, and whatever you need I will give you. That man refused to take the money. Can you imagine? All MFIs are sitting here. Can you imagine this situation? And this is the practical situation I am telling you. This is the practical situation. And that's where the problem is coming. Another aspect, you please, I'm sorry, the time is very less. Wherever the entire data has been first, accounts has been first, and now CBI is calling the bankers. Where I had given equity to those MFIs, I can count those names, but I think it will not be appropriate at this forum. I am facing the heat, what you had seen, how you had changed, what monitoring you had done. Please bring all those documents. Just imagine, a government servant, government money brought to your door in trust and confidence. And imagine the situation. So what happens, I mean, the thing is, and ultimately what Mr. Sarma said, is scarcity brings prudence. When you work with less money, you are more prudent and bound to grow. And as a banker, I think Jha will support me. My experience is that any person in the world, if gets all that money which he desires, he is bound to fail.
I think a very I think Mr. Singh and Mr. Jha have raised a relevant point. I think one thing is very important. Any lender who is lending to another person, whether you are lending to your borrowers, similarly bank, or simply lending to MFIs, I think that confidence building has to be there. And they have to ensure that their money is going in for the right purpose, to a right organization. So that mutual understanding, and then how does it develop? You have to improve your systems, use technology. I think in the last section also the technology will play a big part in the coming years. So if once you also adopt the technology, your borrowers also adopt that, I think a lot of transparency comes, and the banks and the other institutions, they have a comfort level. And I think there is no dearth of funds, what we can make out from here. Institutions are having funds, they are prepared to lend. Only I think we have to, it has to be from the both sides. We have to have a better understanding. I think if that happens, I think that funding from the bank's institution side, it should not be an issue. So because we are short of time, I think you all also must be waiting for the lunch. If anybody has any question, you can just direct it to the concerned member, and we'll answer maximum 2 or 3 in case somebody has a question.
Yes, sir. Yeah, hello. Yeah, I am Noni Kumar Sakya. I am representing one MFI, and ours is the smallest MFI in this northeastern regions. We are the very few small organizations working in northeastern regions, and locally grown, as Mr. Sharma is there and Sarota Solidi is there at earlier sessions, and some other organizations, Procesta, Sotro, some Manipur organizations are there. So, sir, we are very, very small. Our turnover is very less. And after hearing our net fee is the lifeline of our organization, so to say, Mr. Sharma also already mentions. We are living here because of the major support from net fee and some financial corporation and very few local banks. And most of the commercial banks, they deny to support us because our size is very small, our rating is very poor, everything is small. That is why they are not support us. And almost all these speakers already mentioned that Northeast is a very difficult areas. That is why areas is not said that so many kilometers, how many kilometers is not the matter, how many hours takes to reach those places. That is a difficult place we are working. So, sir, I am actually, not only myself, other organizations also, getting some courage attending this meeting today here. So I thank Sa-Dhan that our net fees are already mentioned, CMD sir, that he is trying to push this Indian government to set up some corporates to provide some capital support to the organizations working in this sector, in these regions. That's a very good news for us. And also our CGM sir should be already mentioned, and he welcomed us, the organized small MFIs, NBFCM MFI for their support. And we hope, sir, that definitely we'll get support from you, because earlier also we attended so many meetings like this, and bankers always encourage us, but whenever we attend their offices without documents, most of the banks and other institutions denied us to support in the name of that, sir.
That's what I think we have.
So, sir, I thank you, sir, especially that CP and our CMT, sir, and SBI also already in the earlier sessions they appealed to support us, and we hope that definitely.
Sure. I think that was the purpose of this interaction. So, anybody else, please?
This is for Chairman sir, for you. You made a very good suggestion that there has to be an apex level institution funding the MFIs. We did visit Bangladesh. DG sir also was there with us. There is an organization called VKSF out there, which exclusively funds the microfinance institutions. And as sir was mentioning that they've got a fund for equity, they also have a fund for equity, but that equity is for such kind of small NGOs and small organizations. In fact, the big ones in Bangladesh like Guru, Asha, and everybody has taken funding from such kind of institution, even equity from such kind of institution, and now they don't require the equity, they are now sending the fund to something else. This is one thing which for the Northeast, if you can have a captive organization which helps the Northeast funding, it's a different kind of funding I always maintain. It could do very well. The PKSF model can be studied, which is very effectively working in Bangladesh. The characters, the geopolitical situation is almost similar, Bangladesh and here, the floods, the natural disasters. So this is a very good model that can be studied.
Just respond. I just make another point. Then you respond for both of us. Excellent point. I only just make a small appeal. As I was telling in my opening remarks also, size is very small here. Money required is very small here. So how to accommodate these people, these small entities, how to come out of a separate rule book for the Northeast, number one. Number two, risk is there here. Last year, we got Barak Valley was flooded with a lot of floods. Now our people got affected with the recoveries of our people who are operating in Barak Valley. Now Manipur, there are some disturbances. Now there is some problem in that. So the institution operating here has to handle it with more risk. More risk is there. It should be inbuilt into your scheme of things. And I appreciate that they should make themselves eligible for this. Correct. But these are all some of the constraints which needs to be understood in the background of Northeast and then create something. I am successfully operating my funds. Now I am looking for a good, Government of India is ready to support me. If I get that money, I am telling you, I am giving a challenge. In next 2 years, I am going to show the game change in this Northeast. Then everybody should come to me that how you are doing, I will give the money. This is how we are planning. Now you respond, sir.
Just my response to would be that I am giving this, I have requested Manoj and I request you, Mr. Murthy, because you are senior to us. Why don't you take out all those small MFIs from all 7 states in the Northeast, organize only those MFIs who can be covered under IMEF, right? Even if they are not eligible, you call them, I will sponsor even event along with you. On the spot itself, my team will be sitting, all those who are eligible will be supporting them. What more you want? Do that.
You have got a very good what we call it, feedback or response from both the organizations, and I think that basically settles the issue of the funding, whether it's by way of equity or by way of bank finance. I think things should be moving in the right direction, and with the things improving now, I think we should see better times ahead. I think the bad times in the past, now it should be the good times. So I thank all of my fellow colleagues for giving such a nice their viewpoints, and I'm sure all of you present here would benefit from that. Thank you.
I request Gigi sir to kindly give away the special gifts that we have. Thank you all for giving us a patient hearing. Lunch is served in the first floor, mezzanine floor. First, mezzanine, that area over there, first floor. In between first and second floor, mezzanine floor, lunch is served there. Yeah, you can see from here. And all the speakers, there's a special room for all the speakers to save time actually. Yeah, 207. So we are now going to start off with our thematic session 3. And the topic is providing and enabling ecosystem for microfinance growth in Northeast region. So we are now going to start off with our third and last thematic session, providing an enabling ecosystem for microfinance growth in Northeast region. And I request our moderator, Mr. Vikas Singh, journalist, Economic Times, to kindly come to the dais. I'd also request our discussants, Rupali Kalita, MD and CEO of Northeast Small Finance Bank, Hilam Tasab, State Mission Manager, Financial Inclusion, Arunachal Pradesh, SRLM. I request you to kindly come to the dais. Papia Datta, Associate Professor, Department of Rural Development, Department of Science and Technology, Meghalaya. Sonal Ghosh, Director, Infect Dynamics Private Limited. And PK Kuman, CEO of Chandura Microfinance, Manipur. And I request Gigi sir to kindly felicitate all of them. And now I request our moderator, Mr. Vikas Singh, to kindly start with the session.
Good afternoon, everybody. It's a very engaging topic, providing an enabling ecosystem for microfinance growth in Northeast. Way back in 90s, 95, 96, we have been talking a lot about why microfinance is not picking up in this region, for the want of which a lot of people fell prey to a lot of Ponzi schemes and all. Thank God today microfinance is here. And I know a lot of success stories of microfinance. A lot of people have made their careers, lives out of microfinance borrowings. So here we start a session because we need to take this industry forward. This industry has many challenges. So I have a very engaging panel with me. If I start
with our Dr. Papya Datta, Associate Professor of Department of Rural Development. How is financial inclusion likely to evolve in Northeast from here? From here, where do you see it going? Because we still lack financial inclusion. There are still people who are still, out of the bounds of banking network.
Good afternoon, one and all. And as like the question which was, the discussion started with that, the future actually of the microfinance and how it is evolved, it has evolved and how it will evolve. The trend is something that being the one of the academicians working in the rural sector, and of course we get to know about the microfinance institutions and even the other side of the coin also, because the microfinance institutions, they have their own principle of working, and the community for which the microfinance institutions really are working, first of all, they like the community, they have their own mindset, and I cannot frame it in one thing that they want that or they want this. Every community, even every village, it differs. So according to the microfinance institutions, which I say if it is a centralized, and when they want to work on in the field, they should first consider it an orientation program, in the sense that how actually the community wants them to get involved in the process. And as the NABARD report last year, I guess, there are till now 595 microfinance registered institutions which are working in all the states. But when it comes to the Northeast India, more particularly in the rural India of the Northeastern, there is something which we have to, as a typical community nature. So that transformation which we are talking in these days is a digital transformation, and I guess I find that digital and the ITs is going to help a lot in this, in the sense that the community, whatever they have their own way, they can customize that microfinance lending, or like giving away the the debt and everything. Because in certain situations, I got certain like things or the responses from the like in the field that we didn't want microfinance now, but a few of the people, few sir came and they gave us this sort of loan. So they didn't require that one, but they got that one. So what to do with that process? But I guess that digitally, if they get aware of that, but awareness is the thing which they need it most. Awareness about the digital information, digital inclusion of the finance. And whenever they need, I guess it should be a demand base. But I will, because I came to know that there are a few microfinance institutions also here, and that should be demand based. Before like approaching or before sanctioning few of the microfinance, it should have that like filtration of demand. Those communities, those level who demands actually the microfinance or the finance they need, the credit they need, then only it should go. Otherwise, in the name of the self-help group or in the name of the cooperative, like they are not utilizing the money which they should.
Let's hear something from the industry. Mr. Sonal, who is Director, FinTech Dynamics Private Limited. We are talking about evolving a system here, and IT and ITs, and the kind of penetration which we are getting so far in mobile. How do you see from here, where does the industry go now, in Northeast particularly?
Very relevant question. First of all, thank you, Sa-Dhan, for doing such a wonderful session here. Very enlightened people and very relevant topic. The question is also extremely relevant in the context that any growth, I mean, Prime Minister has already declared this as a digital enhancement here, and we are looking at a digital enhancement. From a perspective of microfinance, see, we are talking about microfinance at a very ground level, very rural or ground level. Now, if you see today, if you go to today, I was just traveling by a cab or even a Toto today, which we call TomTom here. They have a phone pay wala scanner. Now, if you go to the rural India, I mean, we have two very enlightened people from different states. If I talk about Arunachal Pradesh, or if I talk about Nagaland, Mizoram, the penetration is abnormally low. If you talk about a state like Mizoram, the population, 50% population, almost 50% population stays in Aizawl. So rest 50 is in the other parts of Mizoram. Similarly, yesterday I am running a scheme which is a Ministry of MSME scheme called Spurti, where we require the Aadhaar linked banking details of all the beneficiaries. And yesterday only I was in Nagaland and talking to the advisor industry on this. And while I mean, there the Ministry of MSME, the MSME DFO does the verification. When we were talking about the beneficiary details, he said, I mean, all the NGOs just put up their hand saying that we don't have such inclusions, which means that most of the Aadhars are still not linked to their banks, and this is a problem at most of the places in these 3-4 states. Even the advisor accepted that I have a problem here. So this is the biggest problem in terms of it. And when we talked about transferring the money to the beneficiary's account, they said some of the beneficiaries said that my nearest bank is 30 kilometers away. So in my village, nothing works other than cash. So here, if we talk about digital transformation and kind of transferring the money through a digital system, it's impossible because he is not going to use it. How can, I mean, every day he cannot travel 30-40 kilometers. So I think the root thing is that we need more banks in the rural areas. One. Second is that we need to build rural digital literacy to these people, because most of them in a rural system of Nagaland, even Arunachal and other places, they still don't use a smartphone. So I think these are the biggest challenges that we have at the ground level, and I think we have to first resolve these challenges before we build any kind of a digital inclusion or a financial inclusion. I think these root causes first has to be addressed, and then we take it to the next level of digital inclusion in the microfinance.
Mr. P.K. Khanam, from our Chanaru Microfinance Manipur. Manipur has been one state which has at one point of time spearheaded this movement. So how about Manipur? And firstly, my heart goes for what presently Manipur is facing, and we pray that Manipur soon comes to normalcy. But how, being one of the pioneers in Northeast India for microfinance, where do you see the industry from here?
Good afternoon, respected members in the conclave. And first of all, thank you, Sa-Dhan, bringing such type of gathering and producing of very good insight of the microfinance and giving hope to these remote and underserved region. Yeah, actually, so far, we are suffering for last 110 days, and there are more than 170 people died, and more than 500 people injured, and more than 5,000 houses burned, and about 60,000 people are in this place, victims and camps. And among these victims, some of our clients are in the relief camp still. They cannot return their home, and it will take some time. Actually, all the houses, and one of the persons who are coming from I don't want to mention this community or that community, but one of the persons says recently that when I visit the camp, we don't have a difference in between. He belongs to a very good house. He owned the gold and run a very good shop, and I'm just farmer. I earn very small money, but now we don't have differences. And the children who actually discontinue their schooling and coming with one cloth, one pen and shirt, and crying for remembering the burning these things, and the mental crying, immediately crying, and that's very horrible. It's a tragedy, and this is a first time in life. Yeah, this time actually this give impact. Earlier, even in the pandemic time, we are going to collect money from the client, and we try to negotiate in somehow to give back by saying by motivating in many ways. But this time actually, like May up to June, we don't we decide ourselves that we should not ask anything from them, as all the area it suffer whole Manipur, who are staying in the even in the Imphal town. We feel scared about this fear is very high, and in the hill, in the peripheral area, when there is no sleeping, the fire took place every day and killing some 10-20 people every day, and on the other side, the peoples are gathering and doing agitation, procession, and many things. Like it is a totally war zone or something. It happened, and now gradually, slow down the conflict and these issues, and we are also finding improvements in many areas. Like they start their business, and they actually start repaying. Beside the announcement of our state government, ISLBC, for the giving of moratorium crisis, actually this Manipur is riot crisis, and given 1 year moratorium for all the loans. So in Manipur, State Bank is inviting us for the emergency fund to cope up this crisis time for 1 year. And the others are also our lenders like FWWB have in the first day itself. Don't worry, and we hear everything, and whoever you can, and we are not forced. We understand that kind of actually the feelings come from all our funders, like and the particular nephew who have supported in a very big role also supported us in this crisis time, and like others, all small bank finance, like CB and all, they understand the situations and they start giving some relaxations on this time. But what we also experienced during this 110 days was we actually also after well assessing, we disperse. Even the critical time for the recovery of loan, we just disperse loan in the month of May, middle of the month, May month. The incident start from 3rd May, and we disperse at the middle of the May month, and that loan we recover 100% till today. That always shows that in the crisis time, the need base is always higher, and if we motivate properly and identify the right people who need the most, then it will work. It can serve and it can give the positive impact to their economy, family economy, so that they appreciate law. And while I'm talking about the particular issues of the Northeast microfinance compared to the rest of the country, is the operation cost is comparatively higher than other part of the region. Is we have a scattered population, and we have limited hours in the working days also, and the banks are also have limited hours for transaction, and so that our the peoples of particular in Manipur is the morning time is very busy time. We cannot actually conduct like other part of the country. It starts from 7 o'clock or 8 o'clock in the morning, but it is not possible in Manipur. And at the evening time also, we should not expect after 4 o'clock. If it goes in the hill, then it should be little early also. Because actually, dark is also start from 4:30, and the people are very busy. I mean, particularly women folks are very busy at the morning and the evening. So, but the potential, if you see the potential, we are very small institutions, but through our humble service with our funders, we produce from Manipur, we produce 2 national award winners, the city award winner and Vijaya Lakshmi Das Entrepreneurship Award, 2 award winner we produce. So there is we have a lacking in some areas, like operation cost is one, and we also like to how I don't know these expert peoples also please give attention that the perception in the Northeast by the others is also need to actually change. And if we see comparatively the net worth or equity actually of the institution, the fund is very low, so that we cannot expect bigger actually ticket size from the funders. This is one of the another thing. And the banking service, this is a lot of initiative have taken out, and for the last 10 years we found a lot of bank branches coming up. But still, if you see and compare, ours Northeast is the most lacking part in India. And many institutions established, but all the decisions maker of these financial institutions, either they are sitting in Calcutta or Mumbai. There is no who can take decisions for the big ticket of loan or some works. Except in Guwahati, there are some people, decisions maker they are recently coming up, but still comparatively we are very lack of these things. And the financial cost again, it is again very challenging part for Northeast MFI, that we cannot tie up with the formal banking sector, so that we always depend on NBFC and the other small bank finance, and operational cost is very high. Like we are borrowing from 14, 15, 16, and we cannot charge more than 24% and somewhere. So that the whatever we are doing, whatever we are, it is for them only. It cannot happen like we are. But there is no option. We feel that support are great to extent, and this is another thing. And another thing is the Indian credit rating. I don't object the rating parameters and all, but if we go like this, when I see in some aspect of economic development and other infrastructure, we are 10 years behind the national, actually the others. We are 10 years behind, and we need 10 years to improve similar with the other rest of the country. So if you stick on these the common actually rating tools or common policy, then this region will slowly, gradually, it will distance from 10 years to 20 years again. And where there is economically lacking part, that area will come invite, that will area will invite like drug smuggling, insurgency, where if the economy is lacking and lacking, then it will always invite these unethical practices. So this is another thing. And so as some of the panelists also mentioned that the credit grading actually this we cannot score higher, and so that the benchmark of other bank financial institutions we cannot assess. All the microfinance institutions in the Northeast, we cannot assess that these things. So if we look into that, then there should be some mechanism where we can see the geopolitical and the economic status, and many areas we have to identify, and we have to actually framework these things. And
Mr. Khan, will again come back to this?
Sorry.
Okay. And we will hear something from the land of rising sun, our frontier state, Ilang Tapsha. He is State Mission Manager, Financial Inclusion, Arunachal Pradesh.
Check. Thank you for this opportunity, Sa-Dhan. And being as a practitioner in the field for more than 7 years in state rural livelihood missions, generally we work on the SAGs and its federation. So some of the things which I have done in Arunachal Pradesh has been read by some of the microfinance institutions, which has been known by Equifax data, that it has said like in Namsai 13 CR and Lohit 6 CR. I just want to say there's a portfolio, as you mentioned, that Arunachal is a lane of rising sun. I must say it's a lane of opportunity, and I have created in this in this past 7 years. I'll just make a quick journey how it has been done in Arunachal Pradesh. So when I joined in SRLM in the year 2016, it was kind of when I visit banks and when I see the scenario about the NPAs. They just say that SEG cannot be a client whom the bank can give because of the NPAs. When I see the data, when they saw the data, it says like 90%. It was very horrible time for me to convince the bankers. In fact, when I sit back in my room and I found a way why this is happening, and many of the panelists has already mentioned that it's a mindset of the communities or the mindset of the clients which needs to be settled. Over the years, through various FLC program, through various series of NPA program with the banks and also with the communities, I break these cycles, and today it stands at 7%. In fact, we have just recently conducted one program where we are trying to reduce it to 2%, which is the national benchmark. So, because of this NPA reduce and also the mindset of the consumer or the clients or the SCG members or the communities in the Arunachal Pradesh, I can see Northeast Small Finance Bank is moving around, and I can see private banks also coming up to lend to the community. In fact, this has increased the behavioral aspects in terms of the supply in the supply sides. The bankers are now ready to give a loan to clients. But at our ends, what I found is in the demand side, it was very difficult to get the communities to, within a very short cycle, they have to come to the banks or they have to take the credits. So there I floated one of the schemes based on the FLDG concept, first loss defaulter guarantee. It was in the theoretical aspects which I make it in practical. When I pitched this concept to the state government, our former learned CS Naresh Kumar sir was asking me what is this FLG? So I tried banging my head to tell to the government, state government, because they have their own way of understanding the bureaucracy is having their own understanding the things. So I said, you have to give grants as a one leg. And on the other side, so bankers, especially the SBI or Arunachal Pradesh Group, they don't have an idea about this FLDG. So I told the banks that you can take this as a FD. When there's a defaulter by the SAGs, you can take the money from there. So in the FLDG concept, I floated this, and just to tell to the members present here, in the year 2021, state government has given a grant to 500 settled group, 5 crore in tune of 5 crore, 21-22 is a revolving now 500. Now for this year, 1,000. So when I see the credit portfolio in the Arunachal Pradesh, from the banks we have received 33.3 CR, which is amazingly new things for the state government. We have celebrated in the occasion called as 1,000, Mission 1,000 SCGs, where Honorable CM along with the cabinet, they were celebrated where in one day 727 SCG has been given, 8 crore 27 lakhs on one single day. That was also covered by the ET in fact. So that's how these things has been mobilized, and just to tell to the MFIs can there be a way for FLDG really run in the ecosystem of SCGs? No, the SCG access to the members. Why so? Because RBI is giving a restriction 5% should be given as the it should be the loan portfolio, whereas state government, Arunachal state government has given 33.3%. With this 33.3%, the budget which has been created in the community is so alarming, and they are ready to come to the banks. In fact, the advanced portfolio has been increased multifold. So I can see MFIs is here also, and in fact NBFC is also here, also SMB is also here. Can there be a way where SAG, not the SAG as such, but the SAG members can be tapped on? If the SAG members can be tapped on in this FLDG concept, in a nutshell I can tell you, we have covered 85,000 households. 85,000 households where 10,000 to 20,000 are already ready for taking, SAG members are ready to grab the opportunities. If we take the average ticket size of 20,000 also, it will go around, if it's 20,000, you can see 40 CRs is already there. And generally in Arunachal, we have highest ticket size of nearly 50 to 1 lakh. So if we take 50,000, there's a huge opportunity. That's why I say Arunachal is a land opportunity, and we, all of us can take SAG as a platform and also the SAG member as a platform.
Thank you, thank you. One last round where we will basically articulate how to reach to those who are still not connected. And do you think it will require product innovation? Do you think it will require something else to reach out to them? And when we talk of financial literacy, what kind of literacy really will reach out to those people who are, say, staying somewhere far from, in the, say, somewhere around the Indo-China border, Indo-Bhutan border? So how can we bring in those people into the system of formal banking and formal NBFCs? Mr. Sonak, please, one quick reaction from you.
Sure. Sure. See, I think in this, there are already some steps already been taken. There are many CSPs already been opened by leading banks. But I think there is a long way to go, and there is still a huge gap in terms of the financial penetration at the rural level. But I think more digitized banking system, more financial inclusion through digital system, through apps can help. And I think even telecom penetration is increasing now. I mean, if you look back 2 years back to now, I think there's a huge change. And once these systems, once this technology improves, I think overall penetration at the rural area, penetration at border areas will also increase significantly. And I think the banks can also open more CSPs, they can open more ATMs, or they can open more branches and reach out to people through more financial literacy programs, digital literacy programs. And of course, governments are taking a lot of steps in this direction, and I think that will resolve the problem to a greater extent.
Professor Datta, what is your take on this? How to reach out?
Of course, like what Shaunak Ghosh, I do agree with what he said is that we, there's a huge gap between what is and what ought to be regarding the digital transformation in the terms of financials. And yeah, the financial literacy is not the thing which we can do it or by bureaucrats or the administrative people at the one go. But I guess it's a process. I think it's a process, and the process, in the entire process, the decentralization and the theme which is the training of each and every level, following the 3-tier structure, we can go for the decentralization, and even for the financial literacy, a huge training is required. Of course, it has changed. What was the scenario in the last 5 years back, and yeah, of course, it is now a huge change is there in the entire rural economy, and of course, in the coming days, it will change, but provided there should be a proper training, and the financial literacy should be the appropriate way it should reach to the people.
Thank you, thank you. Mr. Taspa, please elucidate your how, because you have a scattered population and you really need to reach them.
It's a very pertinent question. Actually, reaching out is a very difficult terrain. Is something is a bit, as Sir has also mentioned, it's really having a high operational cost. we do have like as Ma'am has said, we do have our own operational way of reaching to the last mile in terms of financial literacy, and also we are taking the digital finance space. So recently also in the Azadi Ke Amrit Mahotsav, Arunachal has also has achieved all the target which is given in the digital finance aspect. Here I want to highlight one more thing is like since being in the SRLM, I try to rope in with Sa-Dhan. Definitely we are going to have a collaboration to leverage the socio impact study about how the financial inclusion is happening in Arunachal Pradesh. In addition to that, recently I'm just trying to collaborate with one of the organizations known as EcoDev, having a tool or analytical tool which is known as Empower. So they have a behavioral aspect tool which can give to the banks or to the SRL, State Rural Livelihood Missions, like whether the SAGs and the SAG members are credit worthy or not. I think in this means fast moving time, we should take some of the tools from which is there in the market so that it can help us SRLM as such and also to the M5 so that you can take a decision very fast.
Thank you. Mr. Kanan, what is your take into it?
Yeah, thank you. I like to share some points which can bring the ecosystem, improve in this microfinance sector. That are like in the region, this northeastern region, compared to NBFC, MFI, and other society trust microfinance institutions. There are a lot of society trust microfinance institutions who are also operating like giving larger loan to the many people. So when we try to control overfinance, over-indebtedness or like multiple borrowers, so credit bureau, the RBI should also check, and the Sa-Dhan should also push to actually include reporting of the credit bureau with the society and trust also very necessary, so that it can control this indebtedness and over-borrowing. As earlier, before RBI guided RBI circulation, we are, all the trust of society are the member of credit bureau. But after RBI circulation, we stop, and now in Northeast or other part of the country, there may be a lot of overlapping which are not counted, but the indebtedness suffer goes to the people. And the another thing is regulatory, actually some relaxation should be given. As earlier it was 5 crores, and in 2025 it will come 10 crores net worth. This cannot happen. Actually, all the microfinance, except for 1 or 2 from the Northeast may survive. Otherwise, all cannot survive after 2025 if we follow the RBI guideline. This number 2. And number 3, that if this disparity of the the resources availability in the Northeast. So if like region-wise or based on the region, if we allocate something, so that the backbone of like in the Northeast, I should say, the backbone of Northeast microfinance is net fee, and the other outsider, if I say, there is FWW. Like the others, yes, the others. Now I'm not talking about the. There are so many, institutions, small finance banks are also giving and operating in this region, and they are quite supportive in some part of larger part in Assam and some part of other state, but there is a limitation to this the other state. And another thing is the rating grading actually tools which are practicing at present. if it goes with this, then we cannot have a hope with the assessing of fund from the banks, public sector banks, or these so these are the few points actually I like to add. Thank you.
Thank you, Mr. Khanam. With this, we have come to our end of our panel discussions, and to me, Northeast will continue to be one of the dominant players in microfinance, and we will continue to be very credit-worthy people as we are. Thank you, gentlemen.
I request Gigi sir to kindly give away the special gift that we have to the moderator and everyone present here on the dais. That the respected Principal Secretary to the Chief Minister, Mr. Samir Sinha, IAS, he is present amongst us. So I request you, sir, to please kindly take your seat on the dais. And I request Gigi sir to kindly felicitate him with our very own Fulam Gamusa. And Mr. Samir Sinha to kindly speak a few words.
Good evening to all of you, and respected Samir Sinha ji and dear friends who have been attending this conclave from the morning. We are really fortunate to have Mr. Samir Sinha ji among us. In fact, it's a position, he's a Secretary Finance, the Secretary to Chief Minister, and you know how busy he is. I have seen him a day, how he has been working. Absolutely no, we can't just imagine the kind of work he has to do. In spite of that, he has been very kind enough to find some time. Morning he was trying to come for the morning session, but then unfortunately because of some last minute requirements, he could not come. But still, it's really great on his part to come and be part of this session, which really shows how much he cares for the sector. It's a great, let's give a big hand to him. Sir, we are really privileged to have you among us, and let me just give you a small briefing of what has happened just in 2-3 minutes. I will not take you much time. In the morning we had the session, and we were fortunate to have the Secretary Rural Development and Panchayat Raj, Mr. Sharma ji, with us, and of course he had explained about the various governmental initiatives as far as the Rural Development Department is concerned, and he's also told about a program of Chief Minister wherein there is a program to graduate the SHG members to individual enterprises. So in that connection, I had also made a mention that probably we will be also able to join hands with the state government of Assam, because we are working out a project along with the Gates Foundation and Naralam to work out a program like that. So if that is the case, we would be more associated with the government of Assam. Sir, among the various deliberations which happened, a couple of things I just want to bring to your notice. First of all, everybody appreciated the role played by the state government of Assam. And I would say that it's something unique that you came out with a program when the sector was in a crisis, a bit of crisis, which not only provided support to the defaulting people, but also gave a kind of a relief to the regular prompt rates, which would have been one of the first of its kind, which was appreciated by everyone, and I would like to place on record our appreciation for the state government. Of course, there was also a view that probably the government can complete this project at the earliest. It would relieve the uncertainty and can start moving forward. Because right now, everyone is expecting for a relief, everyone is expecting for a waiver. In the process, some who are not eligible are also not able to repay the loan. So this is something, of course, I thought I should bring to your notice. Secondly, everyone felt that, especially the speakers felt that Northeastern region is a different region. Even in the last session which you heard about, sir, it is a different geographical area, which all of us know. So one size fit all is not an option for this region. There has to be more innovations, more technological interventions, so that the kind of products which are very much suited to the different regions, different areas of the region can be extended. This is something which was felt by everyone. Second point is that everyone felt that the microfinance in this region, not only in this region, for that matter everywhere, it should be seen as a social business rather than a commercial business. So that social aspect has to be brought into the business activities, and hence more care has to be taken, more concern has to be there for the borrowers, and more of developmental angle should be there from the lender's point of view. Another thing which was felt that probably in the zeal of doing business, one should not unduly overburden the borrowers, or in another way, if you say, it's not that you give loan to everyone and everyone, at least you should make a proper assessment so that the loan does not become a burden to the people, it should become a useful instrument in the hands of the people. So that is something which was felt, that so more of financial literacy is required, more of demand creation is needed, and more of demand-based product to be developed. Financial literacy is something which is very much needed, and for your information, Sa-Dhan along with the Reserve Bank of India has been doing a major program whereby we are doing 2,250 workshops, financial literacy workshops across the country, in which many of the MFI sitting here, including Asha or for the Grameen, many of them are part of that program. And for your information, today we have completed 1,000 such workshops in a matter of 4 months, which our Anjanda already mentioned. So we are also trying to do a bit of it, but then more of such initiatives required. And NABARD has come forward saying that, in fact, CJ NABARD was also here. He come forward saying that the NABARD will be able to support any number of financial literacy activities in the state. Funding is an issue which many of the smaller institutions are facing. So one of the suggestions which came up, in fact, NETFI chairman was also here with us. So one of the suggestions, CMD was here, one of the suggestions which came up was that probably we can look at creating a separate fund as far as the Northeast is concerned. Something similar on the lines of maybe PKSF in Bangladesh kind of a fund, which is exclusively for funding the smaller institution for both for equity as well as debt requirement. So maybe NEC, we can work along with NEC, and maybe a separate fund can be created. Secondly, we felt from the lender's point of view, they felt that probably lending is not the issue. Probably the borrowers should also make themselves eligible. They should also make themselves demand. I mean, they should also create a demand for them, so that lenders will be after them for lending. So some more transparency, some more better governance, some more better technological intervention had to be adopted. Digitization is something which we heard just now also, it is something required, and the diversity of the NER has to be kept in mind while taking any kind of decision. These are some of the important things which are discussed. I don't know anything we have missed out. Any major things, if I have missed out, Anjanda or Manoj, if I have missed out anything, you can just speak. Thank you so much, sir. Thank you, sir. With this, I welcome you, sir.
There was always a sort of debate within the banking system. It is not viable to serve the poor because their transaction sizes are very small, their savings are very small, their loan sizes are very small.
So,
Namaskar and good afternoon. Many familiar faces that I get to see here, but this time perhaps the interaction is of a different nature. Mr. Nambiar is looking at me and I'm feeling very nervous about it. Every time we, in the last 24 months or so, every time, each time we have met, there have been some good discussions. We have always presented contrarian views. So I'm very happy, in fact, Mr. Mammon, Mr. Nambiar, Mr. Das Gupta, Mr. Das, Mr. Kumar, Mr. Sarma, Mr. Bhatt, and senior bankers, representatives of MFIs. I saw many boards actually. It was a different sight altogether when I entered the staff college. Since the ground floor to the third floor, whole lot of billboards were there, signboards were there, standees were there. So it was a different sight because normally you get to see them whenever a workshop is conducted in Delhi or somewhere, you get to see that site. So my compliment to Sa-Dhan for organizing this very contemporary workshop on revitalizing the microfinance sector in Northeastern region to accelerate inclusive development. And in fact, I was just going through in the morning today, early afternoon, and the topics are also very, very important topics, contextual and situational and time series comparative analysis of credit consumption and repayment of Northeast India by Credit Information Bureau, a presentation on developing supportive finance architecture for the MFIs of Northeast India. Status of microfinance sector in the region and the way forward. And I just listened to the last panel discussion. I was there, so I could hear most of it. It was very, in fact, some of the issues Mr. Mammon has already highlighted in his brief opening remarks just now. He talked about hand-holding and support. He talked about the cost of capital for the MFI segment. He also talked about some possible tie-ups with government of Assam, state government schemes out. And in fact, I'm given to understand that one of my colleagues here was here in the morning, and he did talk about some of the rural development programs in the state sector. Obviously, there are a host of I'm just going to talk about my general understanding of the MFI sector in general, and thereafter the problems that ensued in the year 2018-19 before the COVID, and the kind of responses the state government presented, and the way forward. And what would be our role in the change scenario, and the kind of support that the state government can actually extend to this important segment. We all know, in fact, I'll be kind of repeating myself. I just thought that I jotted down a few things. So microfinance, if we come to think of it, in the entire South Asia, it has come of age, and more or less it's a kind of a mature system that has developed across countries. In India, in fact, if we get to see that till 1969, when the bank nationalization is taking place, in fact, there is hardly any banking activity taking place. I was going through some statistics. Around 16% of people only had some access to banks. This was all formal banking system. The large majority of the rural populace, they are actually untouched. And brick and mortar banking, of course, was a distant, very, very far cry when it comes to banking. And borrowing from the formal system, that is from the banks, had its own I will not say complexities, but their own requirements. And there were issues of collaterals, there were issues of paperwork that needed to be done. And as a result, the vast majority, the ones which were there in the villages and in the hinterland, remained outside the formal banking system for a very large time space. And Rangajan committee came, the Purat committee came, and thereafter the financial inclusion, all these models of banking correspondents and banking facilitators, things were kind of, but somehow in many geographies, in many states, it could not take off. And then comes the microfinance institutions, initially to start with not for profit, and subsequently the NBFCs, MFIs, they came and they start their operations, mostly in the rural areas, in geographies which were earlier not touched by the formal banking system. And obviously what prevailed was the money lenders who were there. You go to any state and money lender system that was there, not without reason. Therefore, the Assam also had this Money Lenders Act, which is one of the oldest acts of Assam. When Assam was actually Assam and Meghalaya, they were there together. In fact, it dates back to that period. So thereafter, the microfinance comes, the institutions come, a new era begins. People, majority women, start getting loans. There is no collateral, no paperwork, and at a rate which is still much cheaper than the money lenders would lend at. The sector is doing well. Everything is hunky-dory. Everything is very nice. People are getting the requisite liquidity. They are putting this money to productive uses, and a lot of entrepreneurship activities are coming to the fore. But gradually, there are some signs of cracks. There are some problems in this paradise, and this we start noticing. In fact, I'll come to the state of Assam. We start noticing from 2016. Mr. Nambiar would know better. 16 and 17 beginning, we start getting some signs of this sector not doing very well. Law and order problems coming up, especially in Upper Assam. The rates of interest, people complain, and all the borrowers complain that they are very, very high. This is a kind of an analysis where it should not be taken personally. We are here for a healthy system. Upfront, I would like to say that we are here for a very, very healthy ambience and environment for microfinance in institutions to come and operate in the state of Assam, and in the Northeast. But we are just doing, I'm narrating this just to have a better diagnosis for future course correction. So the economic conditions are not assessed properly. The rates of interest, I repeat, are very, very high. Most lenders are coming to lend to the same set of borrowers, violating the existing RBI guidelines, leading to excessive lending. These are the pitfalls, because there is no collateral required, no paperwork required, and we all know that not all that was borrowed was put for productive uses. Some definitely and surely went for consumption, and sometimes conspicuous consumption, where you could not, in fact, they got the money, it was spent on consumption, not for productive activities. So as a result, what is happening that I am a borrower, many lenders have come and lent money to me. I'm not in a position to repay, and as a result, I'm kind of, I'm absolutely in debt, excessively indebted. And the rest is history thereafter. 16, 17, I'm talking about. The debt-ridden families are not in a position to repay. Some MFIs in some districts, we had reports, resort to forceful collections. This was also another violation of RBI norms. A crisis definitely sets in. This has been the pattern in most of the states. Earlier also in two southern states, this was the pattern. I still remember in 2008 and 9, this was the pattern, leading to some enactment of legislations. And in Assam, I have seen it myself, this happening in 2019, 18 and 19. Serious law and order problems actually were reported from many parts of the state, primarily from Upper Assam. Series of meetings taking place at the level of Chief Secretary. 2-3 meetings were attended by Mr. Nambiar also. And where the state government, MFI representatives, district administration people, police people, in fact SPs, everybody, all of us are attended, and some kind of course correction exercise modality was evolved. And frankly speaking, unlike the banking system or the regional rural banks, the state government has no role, had no role. We did not know the existence of MFIs, officially speaking. There are bodies like the State Level Bankers Committee and the District Level Coordination Committee with the banks. But MFIs were outside the ambit of all this structure. The formal statutes do not provide any interface of the state government with the MFIs. Till date. Unofficially, we are trying to now invite representatives of MFIs in the State Level Bankers Committee that we have. We have a quarterly meeting. The District Level Bankers Committee meeting takes place at the district level. That takes place every month. So, in against this backdrop, the situation was becoming very grim. Law and order was not looking good, and then against this backdrop, the state government was forced to enact some legislation, the legislation of 2020. That was done. And I would not like to go into the details, but Assam is perhaps the only state which came forward, which you also mentioned, Mr. Mammon, that we came out in 2021. We are a poor state. We struggle almost on a daily basis. Come 25th, and the mounting pressure on payment of salaries from first, in fact, it looms large on some of the officials of finance department. We keep calculating and recalculating. My colleague from Arunachal Pradesh was speaking in panel discussion. I was listening to his. In fact, that would be the case there also. So we are a poor state, but still, for the benefit of the people, and importantly for the benefit of the sector, we have spent nearly 20% of our annual expenditure on this sector in the last 2 years, 2 financial years, 21-22 and 22-23, and very soon we are going to spend some amount during this financial year also. And we have cleared the dues of the standard loanees. To safeguard the credit culture, we have extended incentives to the prompt payers also, because we did not want to compromise on the credit culture, and the prompt payers should not that they should not feel that we have left them. And that is why perhaps we started with this, that we started giving incentive to all the prompt payers, people whose loan account was standard, and they were also repayment was also being done in time. So and now, of course, we are in the process of clearing and greening the accounts which were classified as NPA. Of course, in different versions. In fact, right now we are taking up all accounts which had a loan balance of 25,000, 0 to 25,000, and that is also there in the offering. It's only a matter of time. And but during this entire process, there are, in fact, I feel that when you delve into a crisis, when you come out of a crisis, then there are some learnings, and there have been some learnings. Some learnings have been very, very healthy, and we know that lending should be done by the MFIs. State government guarantees an ambience and environment where MFIs should come and operate. Not only come and operate, they should come and operate and flourish. And but only thing is that some of the Reserve Bank of India guidelines, which are already there on lending and how many lenders and assessment of the quantum of loan that should be extended. and assessment of the activities, the productive activities that is undertaken should be also be assessed very clearly. And in case all these are done, and if proper assessment is made, the rate of interest is also as per RBI norms. Of course, we do realize that the cost of capital for most of the MFIs is actually quite high. So obviously, and since it's a kind of a doorstep delivery, so obviously the cost of operations and administrative cost involved in the entire process is also quite high. So we do realize this, but it should not be breached, whatever is that 5 top banks, base rate of 5 banks, whatever is there. And now the government, in fact, Honorable Chief Minister has already directed us that we need to modify our own act and take all such MFIs and NBFC MFI, which are already kind of being regulated by RBI outside the purview of our Assam Act, and we are working on that. Honorable Chief Minister has also kind of directed that it should be expedited. So we are, what is needed is a very kind of a healthy climate, and in fact, in the morning, I was given to understand that CGM NABARD was here. He has also promised some low-cost fund from NABARD. NEC, you mentioned that NETFI CMD was here, and he also promised some of the. In fact, when it comes to the role of the state government, we will also not fall short on this count. We can talk about our portfolio. We can talk about our, in fact, some kind of a hand-holding where the larger body, in case we are undertaking a lot of activities in the self-help group arena, in the rural development arena, and also in the arena of women empowerment. And in case if Sa-Dhan, or for that matter any other such body of MFIs, if they come forward and we truly handhold and each other and support each other, then obviously we will also, state government will also be able to kind of extend. Because as I told that we have spent around good 6,000, 7,000 crore. We are a poor state. In fact, our annual expenditure would be to the tune of 1 lakh crore. And if we have spent without having any direct role, the state government, in order to take the entire take the sector from crisis, which was very deep, when we have done this, why not we will. So I would like to stop here, and we are all there to support. Please come and operate in the state of function in the state of Assam. The only thing is that follow the RBI guidelines, whatever guidelines that are mandated. Be in close touch with the local administration, with the state administration. We have already incorporated MFIs and their representatives in the state level bankers committee, and I think you are doing a human service, and some of the entrepreneurs who have come of age today, it is only because of the loans and credit bullets that were kind of extended to them by the MFI segment. And there are some pockets which are very bright. Let us make them universal in the state of Assam. From the Assam government side, from the finance department side, we promise and we stand to extend all possible help and support to this sector, which is very important. Thank you so much.
And I request Gigi sir to kindly give away the special gift that we have. So with this, we have come to the conclusion of our today's program, and to give away the vote of thanks, I request Mr. Saibal Paul, Associate Director, Sa-Dhan.
Thank you very much for the patient audience since morning. We have a lot of discussions about everything. Sa-Dhan, the objective, the major objective of this event was to bring everyone together to deliberate on the things and to develop a pathway that how can we take this financial inclusion to the financial inclusion forward in the Northeast. And probably we have been a bit successful. The panelists we got since morning was extremely resourceful, and we have got two secretaries over here. One is Samir sir, and we are very thankful to you, sir, for your presence. And we got that other secretary also, and he was also very kind to come here. And you know, we could figure out that he would come yesterday around 11:20 p.m. So it was wonderful from his part that he has agreed to come. So when we are towards the end, we need to wrap up what we have discussed in this. Although Mr. Momin has done it, but there are a couple of areas possibly. What Mr. Sinha has told, which is very good for us as well, because many contentious is there around this our Assam Act, when we will see that these regulated entities will be pulled out from the Assam Act. Possibly it's a very good pathway for our future, and we are extremely thankful to know that, and we have seen this one. We have been working with the government of Assam and also in fact in other states also, that they are extremely helpful. Only the thing sometimes we need to bring together, we need to work together, we need to engage together, which Sa-Dhan has done over the period of time, over the last 25 years, and we could create a space for this microfinance segment. Since the morning we have seen, understood the government schemes. Mr. Dhingra also talked about that how this product diversification is very much needed. Holistic credit plan needs to be needed over there. Then we could understand the revival of the sector. We need to work together with the government. Otherwise, you know, we will be working in the silo. There will be any convergence. So social capital is one of the areas where all of us, we could understand that it is very, very much needed. And back to the basic, always we could understand it. One of the areas which we also understand from Sa-Dhan, working with the members, working with the people, working with government, that capacity building of both what Mr. Nambiar was also talking about, both the employees and also the client, both of these sides are necessary. Our eminent moderator, Mr. Sharma, he was also talking about the rating tool, which is very important because we have seen the cost of operation of this zone is higher. And if we go with the same rating tool, possibly these institutions will get low rate and it will be hard to access the finance from the agencies. These are things. Then also we have talked about technology tech-based financial inclusion is very important. One of the areas possibly once again we have to work in this, which Sa-Dhan is doing, is this your capacity building of this tech-based financial inclusion. In the morning we could hear that Carol was talking about the products and services. Sharadda has appealed everyone, don't go from here. There are certain challenges. If we work together, we can always succeed. Keep confidence on the people. So Mr. Murthy also helped us to understand that there are two kinds of investment we need from the investors. One is capital investment in the institution and also infusion of the lending in that institution. Then we can build up a number of institutions in Northeast where financial inclusion can be happening if we get many institutions working together. So these are all more or less, and we thank all of you to be here, our eminent panelists, our eminent moderators, you people who are very significant to us. Sa-Dhan, we always believe that, and we tell it is the body of the microfinance institutions and the employees working over there. This is the institution for all of you people. We thank NETFI for supporting us. We support all our sponsors. like NABARD has been extremely kind to us. Then SBI was Mr. Penty was very keen to come. I don't know what has happened, but he was very keen to come and he supported us, personally talking to us and taking it forward. Then all of you people have been wonderful to us. And we also thank to this Assam Administrative Staff College, which has worked with us for everything, whatever we have told them. They have tried to make it easy for us. We are thankful to Equifax to give us this wonderful presentation, deeper insights. And over and above, we should be thanking to all our customers, all our says that for them only we are here. For them only this industry is working. For them only all these events are happening. We are also trying to help them as well. Thank you everyone. Thank you. Thank you very much. Yeah. With this we are concluding this event. Thank you very much.
Thank you. I think
from SBI, please. Nobody from NABARD. Then Ujjivan. Thank you so much, sir.
This is the sponsor we are.
This is the sponsor.
9th of November, and all of you, being from Delhi, are requesting all of you to come and join there. We will love to. And last, not the least one, North